So the world has moved a tremendous amount in the last 5 years with AI underpinning it, and the U.S. energy strategy really is recognizing that for the U.S. to win the AI arms race, it needs to win the energy race. So look, anything that is positive for energy demand is good for our business. When we think about our long-term investment horizon, the investment decisions we make pay out over 10, 20, 30 years. And it's very clear that AI is going to be a significant contributor to demand in the long run.
When we were reading about your company in preparation, we saw that you not only are a powerhouse in LNG, but also in ammonia. I had no idea how ammonia plays into the energy infrastructure. Explain it to us.
Yeah, so we recently, last year, we acquired a project in Beaumont, Texas. We call it Beaumont Ammonia. It's to produce low-carbon ammonia, targeting the energy market. So I think most folks think of ammonia as traditionally used in the fertilizer industry, which it has been for decades, of course. But when we look at the question of how is the world going to tackle emissions reduction and tackle climate change, you can blend ammonia into a coal-fired power station. You get the same power output with reduced emissions. When you look at maritime transport, so again, this is a hard-to-decarbonize sector. The maritime industry has been working on what are the alternative fuels. And ammonia is an alternative. You can adapt a ship's engine, and you can adapt the ship's infrastructure to be powered by ammonia. So we made the acquisition. The project uses carbon capture and sequestration. So that reduces the carbon intensity of the ammonia that we will produce, and we'll be marketing it to customers in Europe and Asia.
All right, fascinating stuff. Meg, really appreciate you joining us this morning. Meg O'Neill, the CEO of Woodside Energy. Let's get a check now on what's going on in these markets. Just about an hour into the session, a little more than that. We are looking at red arrows still across the board. Not as bad as we did at the open, but we're still seeing 4 losers for every 1 winner on the S&P 500. The index is down 0.9%. NASDAQ losing a little bit more as we see yields rising. The 10-year 426 and the 30-year getting closer to 5.
Some serious pressure this morning, but let's look at some of the individual stocks that are on the move at this hour with Bloomberg Equities reporter Alex Semenova. Hey, Alex.
Hey, Danny. Constellation Brands is plunging today after the alcohol beverage maker cut its guidance, citing weakening consumer demand. Its president and CEO said that high-end beer buy rates are decelerating sequentially, both in trip frequency and in spending per trip. Shares are down about 7% right now. The stock is down about 27% year-to-date. Other beverage makers are also falling in sympathy. Elsewhere, activist investor Elliott Management built a stake of about $4 billion in Pepsi, with plans to call for changes at the struggling beverage maker. The position makes it one of Pepsi's largest investors. The activist said Tuesday in a letter to Pepsi's board of directors, the activist laid out its plan for how Pepsi can regain market share and improve its financial performance. Its market value has declined more than 25% in a little bit over 2 years as it struggles with competition from and changes in consumer preferences. Elliott's stake was previously reported by the Wall Street Journal. And finally, Kraft Heinz plans to split into 2 separate companies, undoing a mega deal ushered in about a decade ago. One company will include Heinz ketchup and other condiments and boxed meals. The second firm will include slower-growing grocery products such as Oscar Mayer and Lunchables. The split will occur through a tax-free spin-off, allowing management to better focus on growing each side of the business. Kraft's chairman said that the current structure made it difficult to allocate capital to those products. The stock is down about 21% over the last 12 months, guys.
All right, Alex, thanks very much. Alex Semenova there, looking at some of the stocks. Alex, thanks very much. Moving in the bond market, global yield in the bond market as investors return from a long weekend to, as some say, end summer and start work again. This is Bloomberg Open Interest.
Eternal life, a concept that has captivated the imagination of humans since the dawn of time. I'm David Rubenstein. The advances that have been made in science recently has made it possible for people to live much longer than they would have otherwise lived decades ago. With innovation exploding, it's harder than ever to know what's real and what's just hype. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
It is at the front and center of what we're trying to resolve and understand.
Americans need to know they are at risk of dying from the next pandemic.
What we really need in our lives is to build community.
Knowledge is power. The generation before us, cancer was considered a sign of weakness, and many never talked about it.
Longevity without health is not valuable, but if you can maintain health, people are productive when they're older.
Join me on a 4-part journey as I explore the great quest for longevity. New episode every month, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersachi in Tehran, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Bersachi. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Matt Miller, the Circuit de la Sarthe in Le Mans, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's Jobs Day, and Bloomberg has the report under surveillance.
This is going to get Wall Street's attention.
They're not going out and hiring a ton, but they're also not firing. So basically, you have a frozen labor market.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
Financial conditions versus economic conditions. There's a key distinction to make.
And that really is the key question for policy going forward.
The August Jobs Report. Friday on Bloomberg. Context changes everything.
Welcome to September. Welcome to the return of real markets. And a rude awakening you are getting as you sit back into your trading desk just about over an hour into your trading day. S&P 500 down 1%. Matt, it is tech that is leading losses because of what we're seeing in bonds. It's not just the U.S., it is globally in the U.K., in France, in Germany. It is multi-decade highs for the 30-year-old that's pressuring U.S. markets too.
Yeah, let's talk about what's going on in the bond market right now. What's driving that? Bloomberg's macro strategist Simon White joins us now out of London. And Simon, you have a great piece this morning on the U.S. Treasury attempting to tamp down volatility and provide liquidity. That could result in longer term a big a resurgence in long end rates. But we're seeing already globally long end rates start to pop higher.
Yeah, I mean, this is something that has been, brewing for a while, if you like French yields and UK yields have been creeping higher, but it's really not just about a French or a UK problem. I mean, they are kind of vying at the moment to see who's going to be the first for the bond market to repudiate their debt. But, overall, we just have a situation since the pandemic, really, where most developed market countries have just been running very large fiscal deficits. And if you look at non-recessionary fiscal deficits, it's really kind of unprecedented. Right, you have these pro-cyclical fiscal expansions going on, and that's been happening, as I say, for the last few years. And we're getting to the point there where the bond market is becoming quite wary about what that actually means. And of course, when the bond market gets wary, that means rates have to go higher.
Rates have to go higher, Simon, but we've seen higher rates, not in the 10-year yield, which is interesting in its own right than the U.S. That's actually lower on the year, but we have seen long end drift higher, and it's been an equity market that at the same time has hit new highs. Today really seems to be one of the first days that it's caving into some of the pressure from the bond market. Simon, what tends to be the threshold that the bond market needs to go over to actually get some sort of reaction out of risk assets?
If I knew that, I'd be very, very rich. Yeah, I mean, at some point, just things kind of become too much to bear. I mean, perhaps beginning of the month is playing a part here. It's, of course, well telegraphed that September is a terrible month on average for stock markets. So it could just be a collusion of things. You know, the yields are inching up higher, plus the fact that, as I say, you have September. But, you know, you have the US market has been led by tech stocks. You know, tech stocks essentially have an extremely high duration. You have all these distant cash flows, and especially as mainly the AI companies are spending so much money, you know, so much capex, and that really puts off when investors are likely to get paid. So that combination of things, you know, very high duration assets such as tech stocks meeting these very high yields or rising yields, that's really kind of a bad combination for those sort of assets. And you know, really, you mentioned the longer end there, like it's the 10-year, of course, people are fixated on, but the 30-year in most markets is having a worse time, and that's really because the 10-year, certainly in the US and probably in other countries, becomes the longer end. You know, the 20, 30-year sector is less liquid, less demand. So really, it's the sort of 10s, 30s part of the curve that could really show more of the action, if you like, the steepening, than things like the 5s, 10s and the 2s, 10s.
Simon, are there really any bond vigilantes out there? Danny was talking earlier about a Krugman piece over the weekend, pointing out that, at least in terms of equity investors, no one's really willing to sell off stocks because of perceived risks. They don't want to get outside of the pack, stick their necks out, right? And I imagine that would hold true in bond investing as
signal for some time this year. I mean, obviously, very strong performance across the board, and silver now outperforming gold actually on that ratio that a lot of metals players watch. So pretty much a signal of concerns around debasement of currencies or inflation containment and the activity of central banks going forward, particularly major central banks. There's, of course, other supply and demand factors such as sort of reserve managers acquiring more precious metals. All of these are in play.
Let's start with the euro. We've heard from Isabel Schnabel at the ECB talking about inflation risks. We get inflation data a little bit later out this morning. But what are you seeing in the euro that's of interest?
Well, I think what's interesting is the fact that it's really seen through a lot of these potential threats to its strength. It's still trading near 2021 levels. You've got this extreme political uncertainty in France, you know, with a possible government collapse next week. You've got the far right sort of pushing for elections. And you've also got things like the Spanish budget that you were just talking about coming into play as well. You know, there's a lot of concern there. And yet, really, we've seen it holding at these very high levels throughout. Whilst you've also, but at the same time, you've seen the longer dated bond yields, you know, elevated. So that risk is priced in. but not in the euro. And I think that in itself is quite interesting, particularly look at compared to last year when we had the French political crisis. You know, we saw the euro sinking quite dramatically against the dollar, also against the pound, in fact. And actually it's holding up there too this time. And I think really a lot of that just comes down to the dollar weakness. And it's holding up against the pound as well, still above 86 pence. And that also signifies that it's not about the euro, it's not about sterling. It's all about the dollar weakness, which we've seen, you know, really persistent for the last 5 days. It's up a bit today as the US comes back from a holiday. But again, it's been falling for the last 5 days and considerably throughout the year.
So does that continue? Like the US is kind of back to school today. Feels like there's a lot going on. You've got a lot of politics happening. You've got an awful lot of economics happening. You've got payrolls coming up later on this week. Are we in the position where dollar weakness is going to persist? If you look at euro dollar, it doesn't feel like a euro story at all, as you say.
Yeah, and I think there are some key catalysts coming up for the dollar. I think as things stand, that expectation that the Fed is going to cut interest rates, which has been under quite a lot of pressure to do so, it's priced in. It's very highly expected.
Yep.
Of course, this key payrolls data this week, we've also got inflation coming up. You know, if they show a hotter inflation environment or a stronger labour market than's been expected, that could shift the picture slightly. That could make the euro and other currencies a bit more vulnerable and shift the picture for the dollar. But essentially, with that sort of macro uncertainty, lower rate environment, very likely it does seem to support the dollar weakening going forward.
Yep. What is dollar erosion doing to the gold story?
Well, we just saw gold exceed its April records. Again, April being a really interesting time because that's when all of the sort of tariff turmoil kicked off. And we saw gold ascend at the same time as well. We were seeing that dollar weakness then. It's continuing to move upwards as people move to precious metals. There is a real sort of sell the US story emerging there. But again, that could be potentially disrupted if we do see sort of weaker US economic data coming through at all, you know, in the next couple of weeks. So I think that's really going to be the key thing to watch for the, you know, precious metals market as well.
Good morning from London. I'm Anna Edwards alongside Guy Johnson and Tom McKenzie. We're an hour away from the opening trade. Here's what you...
And that then impacts insurance coverage. She was told, you need to rubber stamp what they say. And of course, she didn't believe that was the right way to do it. So there's a lot of upheaval. And we now have another ACIP, Advisory Committee meeting, on the 18th of September. Let's see what they say about COVID vaccines. But already the US's access to vaccines has been reduced.
What does this mean for the rest of the world, though, Sam? I get what you're saying about insurance coverage in the U.S., but do the equivalent of CDCs in other countries take their cue from the U.S. CDC?
No. In fact, to be honest with you, the FDA's decision with regards to the limiting of vaccines in the U.S., for COVID for sure, has brought the U.S. policy, or will bring U.S. policy, in line with the rest of the world. In the U.K., I am not 75 yet. I hope you can tell that.
You look
I'm not
amazing.
allowed to yeah, thank you. I need to go pay for it until you're 75, right? In the US, it was pretty much available to anyone under the age of 64 or 65. Now it's been limited to 65 and above. So this just brought the rules in line with Europe. So Europeans were already there because of our healthcare budgets being under constraint, etc. But the US is supposed to be about free choice. And that is where I think the complexity comes in. And what I'm more worried about is that the language and the way they're addressing it is what will cause people more concerned about actually going and getting a shot.
So what about just if the FDA limits approval of COVID shots, for example, or I don't even flu shots, I'm not sure how they're going to approach it. That would be more, I guess, out-of-pocket expense for consumers?
Correct. Yeah. I think Bloomberg had an article saying that it's going to be like $220, $224 a shot. Now, you and I can probably afford that, right? A lot of people can't. And that will then be the issue that, a pregnant woman, where actually a lot of scientists and medics believe that they should get the shot. And in Europe, it is approved. They do get it. They're not recommended for the vaccine anymore. So that is the problem, because then your baby is born with no protection against the virus, which is bad for babies. So there are these issues. And of course, we got this meeting coming up. Don't forget, there's another thing coming up in September, this big research they've been doing to try and see what is causing this massive rise in autism. And we'll talk about it, I'm sure, the day the research comes out or that week. I wouldn't be shocked if it comes out and says, oh, here you go, there's evidence that it's caused by, there's a correlation with vaccine use or aluminium in vaccines or whatever. And I can show you chart after chart that you can show it's related to glyphosates or high fructose corn syrup that we've used in juices. You can keep making these correlations. We've done things to our lifestyle that have caused this issue and mental health issues, etc. You can't just pinpoint vaccines until you do a full prospective analysis.
Yeah, but that's very complicated, and it feels like people want simple answers, Sam. What does this mean for the companies that develop the vaccines, that sell the vaccines? How are they positioning themselves? Are they pushing back?
Well, they can only push back so far. We just saw some tweets from President Trump saying, look, if you've got this great data about vaccines and their safety and that we hear you've got them and their efficacy, why don't you come and show us? I'm sorry. I can show you a link. I can send it to you. We can put it in the show notes or whatever they go into, a link to a CDC meeting where the companies came and the CDC itself did research showing what the effectiveness of the vaccines had been in the previous 12 months, how many hospitalizations it saved, the economic impact, and their safety analysis. What is it that the administration is looking for? They've been presented 4 or 5 times a year through that same mechanism at the CDC. Who says these companies are hiding the data?
Right. All right. Well, we'll stay on top of this story because I'm sure it's going to continue to develop here. Sam Fazeli, Director of Research for Global Industries and Senior Pharmaceutical Analyst, Bloomberg Intelligence, based in London, covering all the big pharma companies and a lot of the biotechs as well. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research as we have a market selling off here with the S&P off 73 points. That's 1%. The next hour of Bloomberg Intelligence starts right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Coming up in this hour, we're going to check with Tyler Kendall, Bloomberg Television Washington correspondent. Get the latest out of D.C. It looks like the U.S. and India may still be open to some trade talks. We'll get the latest there. Ken Shea is going to join us, Bloomberg Intelligence consumer products analyst. We'll talk about Pepsi. The activist investor has taken a big stake in Pepsi, $4 billion, and may revive talk of a breakup. You sense the theme here today, breaking up some of these companies. Shelley McFadden, senior analyst at Motley Fool Asset Management. Get her thoughts on these markets here. Sonia Wind, a Bloomberg consumer reporter on Nestle shares falls after the CEO is ousted over a workplace relationship. So we'll get the latest reporting from Pepsi. Right now, let's go to John Tucker and get a Bloomberg Business Flash, John.
All right, guys. All 11 major industry groups in the S&P 500, they are lower right now. The biggest decliner coming from information technology as this tech-led sell-off continues from last week. The worst performing individual stock in the S&P 500 belongs to Constellation Brands. Is down about 7%. That's the alcohol beverage company cutting its guidance for this year, citing weak consumer demand. Factory activity shrinking in August to 48.7. This is the ISM survey. This is a sixth straight month of declines driven by a pullback in production that shows manufacturing remains bogged down. Remember, 50 is the dividing line, so that means contraction. Prominent economists rallying behind Federal Reserve Governor Lisa Cook. This after President Trump moved to fire her based on the allegations that she committed mortgage fraud. About 600 economists signing an open letter backing Cook, saying there's a high bar for removing Fed governors and that elected officials should refrain from actions and rhetoric that erode the independence of the central bank. Seeing more moves toward cost-conscious consumers. Walmart adding a new streaming perk for its paid membership program. Walmart Plus members now have complimentary access to the Peacock Premium, in addition to Paramount Plus, an existing benefit. McDonald's bringing back extra value meals for a limited time. There's a $5 sausage McMuffin and egg meal, which comes with hash browns and a small...
That's my go-to.
This is only for breakfast?
I guess. I don't know. There's an $8...
I'm partial to fries.
Oh, wait a second. $8 Big Mac meal includes medium fries and a soft drink. So that's going to start on Monday, Scarlett.
Next Monday.
Just for you.
All right.
S&P 500 down 73. Dow down 400. But NASDAQ down 299. 10-year yield up 4 basis points, 427. The long bond up 4 basis points. That's at, call it 497. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Scarlett and Paul.
John Tucker, thank you so much. We appreciate that. As always, let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Scarlett Fu. We're joined by Bloomberg's Isabel Lee. Isabel, what are you looking at today?
We're looking at TSMC. The stock is down. The ADR is down by around 1.5%. The ticker is TSM. So the U.S. has revoked their authorization to freely ship essential gear to its main Chinese chip-making base. So this potentially curtails production capabilities. The site is located in Nanjing, which is an older generation facility. So American officials recently informed TSMC of their decision to end the so-called VEU, or validated end user. So what is this? It means that TSMC suppliers will have to apply for individual approvals when they want to ship semiconductor equipment covered by U.S. export controls instead of a blanket authorization. So obviously, this is bad news, and it mirrors steps the U.S. took to revoke VEU designations for SK Hynix, a South Korean company, and also, I'm forgetting, what's that one company? Samsung.
Yeah.
Yes, thank
Absolutely.
you, Paul. So the waivers are set to expire in about 4 months. So again, this is, I think, just sits at the geopolitical tension, so the stock is down.
You think if they pay 15% of the sales to the U.S. government, they can get this thing going again?
That might be the way back into it. I don't know. I just grew up in a world of globalization, and I don't know. So this is all
This is a foreign world.
For a lot of it. Yeah, putting up trade barriers all over the place.
That's what they say, the deglobalization, the opposite of what we work so hard towards. Yeah.
Okay. Right.
And PepsiCo is in the headlines today, Isabel, because an activist investor, Elliott Management, one of the biggest, is targeting it.
Yes, so Elliott took a $4 billion stake in the company. The stock is now up by more than 2%. Ticker is PEP. So this makes Elliott one of its largest investors. So we all know that Pepsi has struggled recently in the face of really just stiff competition with Coke and changing consumer taste. Coke is their biggest rival. And Elliott said in a letter to Pepsi's board that PepsiCo's strategic and financial challenges have led to poor results. They also commented on their underperformance and their meaningfully discounted valuation. So Elliott sees a path for a price increase of more than 50% from today's level. So investors are definitely going to cheer that because 50% is a huge jump. We have Bloomberg Intelligence analyst Kenneth Shea writing that Elliott Stake could renew calls for Pepsi to revisit a separation of its global food and snacks and beverages business. But for now, yeah.
So we got Ken Shea coming up in a couple minutes, so we'll break it down.
Did you know Pepsi was number 4 behind Coke?
Get this.
Who was number 2 and 3?
Yeah.
What did I say?
2 is
Dr. Pepper, and then Sprite, and then 4 is Pepsi.
I can't believe. I have to go. I have to go fact check.
And I'm willing to bet that it's only number 4 because so many stadiums are Pepsi-only stadiums too.
Oh, maybe. That's a smart call, yeah.
Right? Now, I'm a Coke person, but you put Pepsi in front of me, I'm just as happy. I could care less, but I am a Coke person. Caterpillar rounded out.
Caterpillar is down by 0.6%. They reported earnings last week, but it seems like Wall Street analysts are still continuing to weigh in on the company's expectations that tariffs would have an even greater impact on its business. And again, Caterpillar is viewed as a bellwether for global economy because it sells on heavy equipment, construction, mining, energy, and basically a lot more other things. So D.A. Davidson, for instance, acknowledges that the tariff instability could last all 4 years under the current presidential administration. Daiwa Capital Markets said that Caterpillar may not see any impact of higher tariffs on sales and revenue, but they're still cutting the revenue estimate for the second half of 2025. So not a lot of good news there. And you see the stock under pressure by 0.6%. Ticker is CAT.
All right, very good. I'm a big fan of Caterpillar. It's a great company. I always want to ride on one of those tractors. You know who rides on those tractors? It's Count Ubelhart. I have pictures of on big tractors.
That's what you get to do as an Bloomberg Intelligence analyst?
Exactly. So, anyway, it's good stuff there. All right.
That sounds dangerous.
I know. Isabel Lee, that's good stuff from you. Thank you very much. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Let's get back down to D.C. to get the latest reporting there. Tyler Kendall joins us, Bloomberg Television Washington correspondent. She's down there in Washington, D.C. Tariffs, I guess, Tyler, let's start there. It looks like the U.S. and India may be open to talks despite some frosty discussions recently. What's the latest?
So, hey, Paul, we had heard from President Trump over the long weekend when it came to the negotiations with India, saying that they had suggested that they could reduce their tariffs down to 0, but he didn't fully open the door that these discussions with India are going to reopen. And keep in mind, we had seen the Trump administration double tariffs to 50% the other week. 25% is that so-called reciprocal tariff rate. Stacked on top of that was that additional 25% over India's imports of Russian energy supplies. Now, at the moment, about 36% of Russian crude makes up India's crude imports, and our analysts at Bloomberg Intelligence say that that number is actually expected to go up in September after we saw a slight dip amid President Trump's rhetoric in August. And at this point, after we saw, for example, Indian Prime Minister Modi meet with Russian President Vladimir Putin over the weekend, we really haven't gotten indications that India is going to let up when it comes to its imports of supplies. Now, we did have White House trade advisor Peter Navarro on Balance of Power last week, and he told us that all India would have to do is halt these shipments. But at this point, it really is unclear if India were to wind down their imports of Russian oil, if the White House would be willing to make any sort of trade concessions, because Paul and Scarlett, in that post from President Trump over the weekend, he said that it is starting to get too late for India, indicating to us that it doesn't necessarily appear that he is open at this point for those discussions.
All right. Thank you for that update. You mentioned the meeting between Modi, Putin, and President Xi Jinping of China at the Shanghai Cooperation Organization. There was a photo that made the rounds of Modi and Xi Jinping holding hands and Putin with his arms around them as well. Kind of a BFF picture from the 2-day summit. I'm wondering if the White House has had any response to that and the optics that that presents for a White House that is very much looking to, put each country on the spot when it comes to tariffs.
Right, exactly. I mean, I think you're really painting the literal and metaphorical picture here, Scarlett, which is that this is not going to be a welcome image from this White House, that we haven't heard them weigh in directly when it comes to this specific meeting. Now, White House officials would likely point to the fact, for example, I think Treasury Secretary Scott Bessent did kind of mention it in an interview over the weekend, that this was a long-planned meeting, this security summit, so they were expecting these leaders to all be in the same room. But when you look at some of the tangible several deliverables that we saw out of this meeting, including China and India agreeing to resume direct flights after about 5 years of those being halted. This sort of cooperation isn't going to be something that this White House wants to see, as they're trying to really build up the pressure here. And when it comes to India in particular, and for our radio listeners, we have the Indian Prime Minister on the screen right now. This was really an important alliance that we saw prioritized in the trade talks pretty early on, in large part because of India's role as being a bulwark, really, for the U.S. to counter China in the region. So it's something that we are watching closely as to whether or not President Trump weighs in on, but it definitely does add perhaps some heightened tension to the negotiations, not just with India, but also, of course, with China, as we know that those trade talks are ongoing as well.
All right, Tyler, thank you so much for joining us. Tyler Kendall, she's Bloomberg Television's Washington correspondent. She's down there in Washington, D.C., getting us the latest on tariffs and maybe some geopolitical discussions between India, China, Russia, and what does that mean for the U.S.? So that's our geopolitical call here of the morning. Let's get back to what's going on in the markets. Your markets continue to sell off. Lots of deals out there, but the deals aren't, M&A per se. They're mostly about breaking stuff up. Some of those consumer products companies that have been put together over the last several years, we're seeing some of those companies think about breaking themselves up. One of them is Pepsi. We have Pepsi. We have investor, Elliott Management, activist investor, taking a $4 billion stake in Pepsi, maybe provoking some change down the road. Let's see what happens there. Ken Shea joins us, Bloomberg Intelligence Senior Consumer Products Analyst here. Ken, I mean, when you look at Pepsi, you think about it as Frito-Lay and all the snacks on one side, and Pepsi and all the other soft drinks on the other side. And it just feels like it's a company that, boy, it could be broken up just like some of these other consumer products companies. What do you think?
Yeah, hi, Paul. Actually, it's only a few weeks ago, I wrote a report over Bloomberg Intelligence saying that given the weakness in the stock, it's really just a matter of time where these talks are going to be revived. Recall back in 2014, Tryon, an activist, actually advocated that, breaking the company up between beverages and foods. The company decided not to do it. It made the case that it was getting good synergies between the two. Fast forward to today, Elliott isn't quite going that far. In Elliott's letter today, it said it believes that value can be created by simply having the beverage side, roughly 40% of the business, just refranchise their bottling operations. In plain English, what that means is to divest those capital-intensive operations, manufacturing operations that create the finished product from the syrups and concentrates that Pepsi, the beverage company, sells. That's really the golden part of that business. The jewel of that business is the concentrate business. That's what Coca-Cola does. Coca-Cola sells concentrates, syrups, they're high margin, to third parties to make the product. PepsiCo chooses to do it in-house. That results in tying up capital, lower margins, and so on. At the same time, Elliott is also saying on the food side, perhaps some SKU rationalization is due, meaning there's a lot of food products there that they may not be well suited to sell. The Frito-Lay is doing really well, although it's a kind of a slowdown right now with many consumer products. It's the Quaker Foods, I think it's really targeting and saying, maybe some reduction there may be in order. So that's really what the gist is today with Pepsi.
All right, Ken, thank you for that very, very detailed rundown. I want to pick up on what you were talking about with the bottling business, refranchising the bottling business, which is what Coca-Cola does right now. What does Coca-Cola give up by doing that? I mean, there had to be a reason why Pepsi chose to keep it in-house up until now.
Yeah, that's a great question, Scarlett. So go back in time, 10, 15 years ago or so, both companies had done that. They both had separated those businesses. PepsiCo decided to retain, or it sold it, and then it bought it back, and it decided to keep it and made the case at the time that the soft drink business was in a downturn. Volumes were weak. They thought by gaining more control over those bottling operations, they could right-size the ship, that they could get it back in order, align the interests between the bottlers and the company. Because you've got to remember, Coca-Cola, by separating it, it is to some degree giving up a little, it's accepting a little risk. I mean, these are third party, these are independent companies. They can sell beer, they can do other things. PepsiCo didn't want them to do that. PepsiCo said, look, we want you to be fully aligned with what we want. So that's what they said they gained from that, and I guess there's some truth to that. But you're giving up a lot also for the factors that I mentioned before.
Ken, you've been covering this consumer space for a long time. You've seen the cycles come and go. it seems like we're in a cycle of breaking these companies up. I mean, you've seen this game before. How do you think this is going to play out across the consumer space?
Well, given the PepsiCo stock before today was down about 20% over the last 2 years, so it's really disappointed investors. And beyond that, it's that their long-term algorithm of high single-digit comparable EPS growth is not going to happen this year. They're looking at flat earnings, this year. And investors see the writing on the wall. They see a slowdown, and they're saying, look, maybe there's more than just a cyclical element here. Maybe there are some structural things this company can do. I think Elliott's making some good points here, and I think PepsiCo ought to follow through on some of these if they want to regain some of the low sentiment that's out there among investors.
Do you expect other investors to jump in here and kind of ride on Elliott Management's coattails? I mean, is Elliott going to be empowered to ask for more going forward?
That's a great question. I think there are going to be some supporters of Elliott. Like I said, I think Elliott's making some fair points. PepsiCo has been really disappointing on the operational side, and like I said, in the stock front. I think it ought to be open ears to listen to what Elliott says. I think others will support Elliott in this case, yes.
All right, Ken, thanks so much. Appreciate it. As always, Ken Shea, Senior Consumer Analyst for Bloomberg Intelligence, based down there in Princeton. Coming up, Shelby McFadden. She's a Senior Analyst at Motley Fool Asset Management. She's going to join us to talk about these markets. Again, do you drink soda, Scarlett?
No, I avoid it like the plague. I can get my empty calories somewhere else.
Okay.
Through Lay's potato chips, which is also owned by Pepsi.
Okay.
So.
All right. Again, John, Coke or Pepsi?
No.
Nah?
Pinot Noir. I mean, why,
why
just
waste time?
Skip right ahead.
Go straight to it. I love it.
All right. Again, I'm a Coke person, but again, you put a Pepsi in front of me, I'll be just as happy. But they spent years and gajillions of dollars creating brand loyalty.
And Paul Sweeney's like, either way.
Well, Matt Miller's the worst. He doesn't arbitrage his Uber and his the other one, the Lyft. Yeah, he just goes right to Uber. And you can save like 20-30% by arbitraging.
Big spender, that Matt Miller.
I know, exactly. S&P 500 off 82 points. That's 1.3% down at the lows of this session. NASDAQ down 336 points off 1.5%. We're going to have more coming up. This is Bloomberg Morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. We are being brought to you by Oracle. Attention growing businesses, Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitments. See if your company qualifies at oracle.com/Bloomberg. Well, the sell-off continues. S&P 500, 85 points lower. That's down 1.3%, 63.74. Last check, all 11 major industry groups in the S&P 500 were lower in today's trading. Dow Jones Industrial Average down 470 points. The NASDAQ 100, 360 points lower. That is down right now 1.5% as the tech-led sell-off in stocks continues. Now, for those of you like Paul who follow the league tables, Centerview Partners has nabbed the key advisory role on the Kraft Heinz breakup. Wow. So they got it coming in and they get it going out. The boutique bank advised them on the mega merger a decade ago. Awesome. Kraft Heinz splitting into two publicly traded companies. They're going to separate the business selling condiments like ketchup from the slower growing brands like Oscar Mayer hot dogs. Centerview is the only financial advisor on the deal. They've long been at the center of deals in the food and beverage industry. For instance, they advised Altria Group on the separation of its food unit back in 2007, which was eventually named Mondelez. Factory production activity, that is, shrank in August for the sixth straight month, driven by a pullback in production. Manufacturing remains bogged down by higher import duties. That's the start of the data this week. And at the end of the week, we're going to get the jobs report. And creatine is shedding its Jim Bro reputation, unlocking some lucrative new markets. Women and older Americans getting wise to the benefits of the supplement. Sales are booming. GNC, which has over 4,000 locations across the U.S., has seen creatine sales surge 75% from 2020. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Scarlett and Paul.
Hey, John Tucker, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. September, historically not a good time for markets. Well, first day of trading kind of bears it out here. But let's check with somebody who does this stuff for a living. Shelby McFadden, Senior Analyst of Motley Fool Asset Management. Shelby, what do you make of a day like today? Just another day of trading, or are we in for something more here?
You know, I think it's mostly another day of trading. We're coming off of a long summer, off of a long weekend. Going to see a little bit more volume and activity in the markets, not surprising at all, because we're not just coming off of a little bit of a break in the U.S., but traditionally we know that European trading also slows down quite significantly in August. So everyone's sort of coming back to the table. From the institutional side, rebalancing has just wrapped up. And if you're watching institutional trades, then you might be sort of chasing that into the first trading day into September. So on the second day of the month, first trading day of the month, I'm not yet too worried. This seems a bit normal. We'll wrap up with some somewhat important earnings coming through for the rest of the week with Broadcom and Salesforce. So we'll get a little bit more information there, but I'm not yet ready to jump out of my shoes on this activity.
Shelby, I'm going to ask a dumb question, which is, you mentioned how institutional investors are done rebalancing. Why do they rebalance at the end of August?
Yeah, so there could be a little bit of rebalancing there just because part of it could be the fiscal year that they're running on. Another could just be that wanting to take a little bit off of the table if things are a bit rich, especially in tech sector. So oftentimes we'll see some rebalancing quarterly, but it could also be on a monthly basis, depending on where some of their targets are for pricing. So it's not completely unusual to want to take some chips off the table to get back to some of the more tactical shifts, and then going ahead and making the bigger rebalancing plays on a quarterly basis to go ahead and get back to the long-term sort of target allocation. So seeing that at the end of the month is not unusual at an institutional level, also because they're able to sort of scale up on the cost of trading. So it's easier for them to do trading a bit more often.
Okay, that makes a lot of sense. And I ask all of this because I wonder and whether they slow their buying as well.
Yeah, and I mean, we've seen this happen in the past where you're looking to see what either chairmen or executives, and even, sometimes they're just on buying and selling plans for their own exposure. But we have seen these things sort of get followed, right? We know that different 8K filings can be signals for certain quantitative funds and things like that. We don't necessarily use them for triggers at Motley Fool Asset Management, but it is something we will follow. Our board members or executives buying up a lot of their shares. And if it seems to be sort of outside of exposure management, that's something we might want to look into. Should we be interested? Is there a reason they're picking up more on the market?
How are you positioned here for the remainder of the year, Shelby? We've had some volatility, obviously, in the beginning of the year. We've had a little bit of stability here, but there's still a lot of crosswinds out there.
Yeah, I would say that much like the rest of the market, we still have a good amount of tech exposure in our sort of flagship funds, if you will, TMFC, TMFG. And that's just partly because that's where a lot of the fundamental opportunity is, even though there is still a great amount of fluff in the valuation. You don't necessarily want to just run out of those positions. But we are also still looking at different opportunities outside of tech. So we have not completely abandoned consumer and things that are consumer exposed. We've not completely abandoned retail or CPG. It's something that we have to watch keenly for. We do also have some other smaller software plays. So I think that maybe just by the sheer structure valuations right now, we don't look as diversified. But in terms of how we're considering opportunities, it's definitely a little bit more inclusive, still looking at things like financials, real estate, insurance, sort of across the board.
And how are you thinking about the earnings that you mentioned, Broadcom coming up, because it's been seen as one of the beneficiaries of the AI play that is not as overly inflated as an NVIDIA or, a Palantir. And I recognize that Palantir and Broadcom do very different things, but if you are looking to just get in on AI exposure, that's certainly one way to do it.
Mm-hmm. Yeah, the thing about Broadcom is I'm sort of thinking about it also in tandem with Salesforce, because it's a great example of the supply and demand dynamic there. So when we look at the enterprise level, we look at companies like Salesforce that are going to be sort of providing solutions, selling solutions to customers that would employ some of this technology. The demand for it, that's where some of that's going to get reported. Similarly, when we're looking at the hyperscalers, Microsoft, Meta. So we're seeing the demand get reported in those calls, and then the supply coming from the Broadcoms of the world. And so that dynamic has to continue to play. If we would have seen something come out of a Meta this quarter that says we're slowing down, it would have probably been more likely that we'd see a little bit of negative sentiment when the likes of NVIDIA reported. So I think that coming off of a summer where we had really strong demand from hyperscalers, I'm pretty keen to see at least neutral to positive rhetoric and guidance come out of Broadcom. But some of that might be influenced by how Salesforce does as well.
All right, Shelby, thank you so much. Always appreciate getting a few minutes of your time. Shelby McFadden, she's a senior analyst over there at Motley Fool Asset Management based in Alexandria, Virginia. Some news coming out of our friends at Nestle over there in Switzerland. The shares fall after the CEO is ousted over workplace relationship. We want to get the latest reporting on that. Sonia Wind, Bloomberg consumer reporter, joins us here. Sonia, give us the background, what's happening at Nestle.
Yeah, so it's really an unprecedented time for Nestle. Another ouster of the CEO. So the background is yesterday Nestle came out to say that the CEO, Laurent Frexe, is immediately dismissed. The background is that he had an undisclosed relationship with a subordinate, which he failed to disclose. So that's a no-go at the Swiss group, which is known for its conservative corporate culture. And what we learned through our reporting is that the concerns were first raised through an internal system called Speak Up. Nestle then chased these concerns and couldn't substantiate these claims. But the concerns continued, and then the board decided to launch a wider investigation, which also included external counsel, and that then ended up to confirm the allegations. So really a turmoil that's going on at Nestle. It's an extension of the turmoil because Frexe has only been there for a year. It's exactly on the day that he started his position last year, and now it's over. And he took over from Mark Schneider, who was the previous CEO, who was also ousted, surprisingly, but in his case over poor performance of the company. So Frexe was seen as a safe pair of hands, but now it's clear it's also that didn't really work out. So now we have a new CEO coming in, so the first CEO in just a little over 1 year, Philippe Navratil, which I can tell you a little bit more about.
Yeah, let's do that, because I mean, I'm just looking at the parade of CEOs coming in and leaving the company, and I imagine that investors are feeling pretty nervous about this situation. Do they want someone who is a lifer at the company, or do they want someone from the outside who can inject some new ideas into the company?
Yeah, so I would say the most reactions were quite like shocked and surprised. The new guy who's coming in, Philippe Navratil, he has been at the company for 20 years, more than 20 years. So he's like Frickse, a company insider, which is generally seen like as a positive thing. His focus was mainly on coffee in the past. So he rose through various ranks, led the coffee unit, and then turned out to be the CEO of the Nespresso unit since July last year. The Nespresso business is one of the most important businesses of Nestlé. And now he will have to take up the challenges that Frickse was trying to fix, which is to focus on fewer but bigger product initiatives, to boost advertising spending, and also to divest of struggling businesses. So that includes certain vitamin brands like Nature's Bounty, and also the bottled waters unit, which Frickse spun out into a separate standalone unit. So he inherited quite a lot of restructurings, and we will see how that turns out, and if he will be able to turn around the Swiss group that has been struggling of late.
So what is the primary challenge for this company, Sonja?
Yeah, so it started under Mark Schneider, who, so in 2022, Nestlé kind of peaked, and since then it struggled. And the background of that has a few reasons. So one of them is that Mark Schneider, he tried to bring Nestlé into various new arrays, which some said might not have been the best choice. And then also we saw this bout of inflation after the pandemic, and that led many consumers to flock to cheaper off-brand items away from Nestlé's branded products. And Nestlé since had trouble to window shoppers back, because Nestlé raised the prices to deal with inflation, but some say this was a bit too much. And now we have the new situation with soaring commodity costs for coffee and cocoa, and Frickse has also hiked prices for various items that included those commodities. And so far we've seen that it hurt Nestlé a bit, especially for the cocoa products. Coffee is a bit of a different story because consumers really like to stick to their habits. And so Nespresso and Nescafé was actually holding up pretty well compared to that. Apart from that, another challenge that Navratil will also have to look at are, of course, the US tariffs by Donald Trump. Frickse has previously said that Nestlé can deal with it well, but Nespresso is, for example, one product that's exclusively produced from Switzerland.
All right, Sonja, thank you so much. Appreciate that. Sonja Winning, consumer reporter for Bloomberg News, talking to us about the news coming out of Nestlé. We're going to have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash. And this on a day with the major averages. They are all lower, down by over 1%. At the same time, we've been seeing a sell-off in bonds. Prices down, the yields up. The 30-year yield up close to 5 basis points at 4.97%. The stocks joining a slide, the global bonds for the first trading day of September. All the mega caps falling. NVIDIA seeing its longest slide since March. Among the most active, it is now down just about 3%. PepsiCo shares, they're up. Elliott Investment Management has built a roughly $4 billion stake in PepsiCo. They plan to push the beverage giant to make changes to boost its sagging share price. Right now, the share is up 2.4%. Of course, the Kraft Heinz board approving a plan to separate the company into 2 independent publicly traded companies, which kind of raises the question whether they're hooked up in the first place. The current dividend level expected to be maintained. They may also change their names. Right now, the S&P 500, 92 points lower. That's down 1.4%. Dow Jones Industrial Average down 516 points. The NASDAQ 100, 401 points lower. The crypto token of the project backed by President Trump fell on the first day of trading Monday. WLFI is the token of the Trump family's World Liberty Financial. Fell as much as 25% before recovering some. World Liberty Financial was set up last October with Trump as the co-founder emeritus and his 3 sons as co-founders. By the way, the crypto entrepreneur Justin Sun, he's the guy who bought and ate a $6 million banana last year. He has invested $75 million.
So that adds credibility, right?
Yeah, in my book, I guess. In today's world, we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Scarlett and Paul.
All right, John Tucker, thank you so much. We appreciate that. Scarlett Fu, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. We got some really smart folks here at Bloomberg that track and analyze the energy transition that we're going through here on a global scale. That's Bloomberg NEF, and they join us here today. Antoine Vanya-Jones, Head of Trade and Supply Chains for BNEF. Antoine, talk to us about your world these days, the transition to cleaner energy. How's that being impacted by this administration?
Yeah, there's a few things that have happened that are quite dramatic in recent months. There's been a bill that has been passed by the Trump administration which seeks to reverse a lot of what was brought in under Biden, under the Inflation Reduction Act, which was this big climate bill that gave all of this federal money, mostly in the form of tax credits for clean energy. A lot of that's being cut. So there was a really big high-profile tax credit for electric vehicles. That's going to be gone as of this month. And a lot of the other stuff is made much harder to access. So this is a big problem for many of the manufacturers who have led to over $110 billion of announcements for factories in the United States. There's a lot of question marks about the fate of those factories and the business case under the current environment.
Does the current administration want a transition to clean energy, to green energy?
The current administration is focused on a number of different things, such as when it comes to energy, data load increasing due to data centers is one, a nuclear revival for the United States is another. When it comes to clean energy, when it comes to electric vehicles, those are things that are being actively diminished in terms of their rollout and support at a federal level. So the answer is no, they are pushing against it.
So how are companies within the entire supply chain, how are they reacting?
They're waiting and seeing for example, there's a number of different things that are happening where it's just not clear what the outcome's going to be. One of the things is that in the most recent bill that's been passed by the Trump administration, there's a number of rules around whether or not you can have any kind of Chinese involvement in a factory project at any real level. It seems it's incredibly expansive beyond what was done under the Biden administration. And the guidance for that isn't out yet. And that's just one of the things where uncertainty is just continuing. We're still waiting for clarifications on that specific rule. And then if you zoom out again, the tariff situation, the volatility there, we've had recent news around, the ultimate Supreme Court decision, which will likely impact many of the so-called reciprocal tariffs, is going to be, something that we are waiting for early next year. And that's just one example of how, even with the tariff situation, things are changing by the day. and there's a lot of uncertainty there too. So in terms of new investments, very little is happening because people are waiting and seeing, and that's due to the volatility, not just in terms of federal support and the fate of those programs, but also in terms of trade policy.
And there was the One Big Beautiful Bill as well. How did that change up the landscape?
So that scrapped the electric vehicle tax credit, for example. That is gone. That has also brought a whole host of what's called foreign entity of concern rules around accessing many of those tax credits. Those rules were in place under the Biden administration, but in a much more restricted form. These are being expanded far beyond what they were. And the aim there is really interesting. Originally, there was a thought that the Trump administration, when it came to Chinese involvement, investments in the US, would be much less ideological, much more quote unquote transactional. That doesn't seem to be the case with this bill, where suddenly you have a new series of rules which is going to make it extremely hard for any project where there's any kind of doubt as to some Chinese investment in the form of debt, financing, inputs into a factory from going ahead and receiving tax credits. So that's one big outcome from this bill, and we're still waiting on the guidance for that and how it's going to play out.
I mean, does the U.S. have the capability to be self-sufficient in, transitioning to cleaner energy, or does it need a global supply chain?
It needs a global supply chain. So what we've done, we've just published a huge report sort of detailing the current installed capacity for lots of different sectors in terms of factories online in the United States. We look at what's been announced. We make a call as to what could come online. And when it comes to some products, like downstream products for things like solar modules, so solar panels in their finished form, when it comes to lithium-ion battery cells, so that's batteries in their finished form, the US actually has a pretty good shot at being self-sufficient by 2030, we think. However, and this is a big however, when it comes to the inputs, the components that go into those things, so for a battery, it's stuff like the cathode, the anode, you're going to have to rely on other trade partners. If we suddenly have rules which shut out China from those supply chains, that means that the mapping exercise that we've done suddenly becomes quite relevant, where you begin to say, oh, well, Japan has a surplus in separators that are used for making batteries. South Korea has a surplus in cathodes. And that's when you start having this sort of rejigging of all the different puzzle pieces, and where procurement teams are going to be very busy over the next few months.
Can any of that be brought back to be made in the U.S., onshore manufacturing?
That's the aim. And under the Biden administration, where you had not just tariffs that were relatively stable, but you also had visibility in terms of future support, and you also had demand side policies, which meant that there'd be local demand for your product that was locked in. That, even under those circumstances, still quite hard to do with the kind of price increases you see in the US. We've got a lot of announcements. We'll see whether those factories get built now. But in terms of that midstream, we haven't seen as much in the way of announced investments, and it's very unlikely that we're going to see anything in the short term under the current environment. So the short answer is no, not anytime soon.
What are the capital markets like for any of this these days? I would think with the uncertainty that you've laid out for us, capital markets have they dried up? Raising capital for these?
It's become a lot harder, and we've seen a real fall in terms of VC funding for example, for a lot of these projects. There's been a shift towards things like AI, defense spending, and there's also some big question marks around, the suitability of some of these early stage funds for funding clean energy and climate technology in general. The returns profiles are very different to many other sectors. And that means that, there's an increased relevance to the kind of policy changes we've been seeing recently. And actually, when it comes down to it, you really do need a lot of state support. Even, that needs to be qualified. When it comes to EVs, that might be the case. We're still going to see a lot of deployment of solar power, for example, and things like batteries, because costs have just gone down so dramatically that a lot of that will be built even without the kind of federal support that we saw until recently. So there is a silver lining for some sectors, but for many sectors, we're going to see some real difficulties in terms of financing.
Right. Yep. Seems like a difficult headwinds for this transition here. Antoine Wagner-Jones, head of trade and supply chains for BNEF. They're the team that tracks pretty much this and analyzes this energy transition. So we appreciate getting a few minutes of their time.
The solar energy sector has had a really rough go these last couple of years.
Yeah.
I mean, higher interest rates made it unaffordable for a lot of people to want to install paneling on their homes. And now you have an administration that is actively against it in every way, shape, and form.
Yep. And boy, I think the hardest hit is the offshore wind. I mean,
Yes.
just shutting down projects, projects that have been funded and
80% complete,
Yep.
and then they get shut down, like the one in Rhode Island.
Yeah, so I don't know. It's, again, some tough times for the transition to perhaps a cleaner energy grid. We'll have more coming up. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Head over to youtube.com and search Bloomberg Podcast Live. I tell you, we're getting some IPOs are starting to pick up here. I just heard from a little bird that 5 IPOs launching today. Maybe get some pricing next week. Anthony Hughes joins us, equity capital markets reporter for Bloomberg News. Anthony, talk to us about just today, what we're seeing in terms of filings today. It feels like things are picking up in the IPO market.
Yes, this is really shaping up for next week to be the busiest week of the year in terms of the amount raised by US IPOs, with the companies that launched their IPOs this morning, which was somewhat flagged because they've first filed a few weeks back. Really, we're looking at these companies raising somewhere around $3 billion. It might be 1 or 2 IPOs that launch over the next day or two as well. So, you know, you're getting to a reasonable sum of money. These aren't really massive IPOs, but they're significant in their own way, with a big sort of bias towards fintechs, crypto, with some AI aspects to them as well.
All the buzzwords. Now, you know, September, people get back to work from their summer holiday, try to get deals done, but unfortunately, there's some headwinds out there most years, and that is September is not a good month for the stock market.
Yes, I saw some data this morning which suggested that in the last 10 years it was the worst month of the year, and I think the average was down about 2%. But, you know, having said that, I think that there's a real appetite for IPOs, and if these things come out of the gates and there's a sense that there's a chance that these IPOs can really produce pretty large alpha from day one, then perhaps this broader market headwinds may not stop these IPOs from going ahead and doing reasonably well, but it is a little bit of a concern.
One of the deals that filed today is Klarna, a fintech company, and here's what I didn't like. Klarna, the company, plans to sell 5.6 million shares in the offering. Selling shareholders are offering 28.8 million shares. I don't like my selling shareholders selling an IPO. In fact, in my deals, you have a hard time getting me to do that deal.
Yeah.
Is that unusual, or is that happening more and more these days?
We see a reasonable number of IPOs where there is selling shareholders, and I think it's always looked on upon as a little bit, not always totally favourably. I mean, this is the company that's been around for 20 years, and really in the last 5 years has sort of expanded pretty heavily in the US. So, I mean, I think some of those shareholders have been there for a long time, and ultimately they sell a portion of their holdings and retain some. So you know, it's something that is pretty much accepted, but you know, there's always a question about that.
Times have changed. Wouldn't have happened on my watch. That's why God made the 180-day waiting period, so you can't sell. Talk to us about performance. How have the IPOs been performing this year?
Pretty well, yeah. The average IPO is probably up around 40%. It's changed a bit over time. I mean, sometimes we've seen IPOs come really strongly out of the gate, up 100% or more, and then come back somewhat over the course of time as people move on to the next thing. But generally speaking, IPO performance has been very good, particularly we've got to say for companies that are in areas such as crypto and AI, whereas companies that have a lot of debt and sort of come out of the sponsors, the private equity firms, are not as attractive. So, you know, it's worth not getting carried away. And the companies that people really like are the ones that have scale and growth. I mean, at the end of the day, the IPO market's about growth. So as long as companies are growing pretty strongly, there's going to be a fair bit of demand. But there are some companies that go public that don't really have strong growth characteristics.
Dumb question of the day. Do ETFs buy IPOs?
Well, typically in an IPO, the institutional allocations would go to ideally active investors, so there wouldn't be really a significant allocation to passive investors, although obviously when these stocks go into indices and whatever, they would form part of ETFs. But typically the aim and the goal of most IPO processes is to allocate to active managers who've done the work, they've looking at the fundamentals, they're looking at the company not because they're making a passive investment decision, but because they like the company.
What's kind of the institutional retail allocation these days on most deals?
Yeah, well, it's an interesting question at the moment because there is a big push on for more retail allocation to IPOs, but typically it's a single-digit number for retail allocations. But obviously, in the recent IPO of Bullish, which was quite notable, that company decided to allocate a significant amount of the IPO to retail through not just through the usual retail channels, but also through these self-directed retail channels. And this is something we've been looking at too. But for say 20% of the deal to go to retail is unusual. But it shows you that for certain sectors, particularly say crypto, where obviously a lot of the foundational support for that sector has come from the individual investors, you know, that's not a bad strategy. But you know, to capture a lot of the enthusiasm about IPOs is happening in the retail side, the self-directed side of the market. But a lot of that enthusiasm is really evident on when the stocks begin trading, because it's very difficult for those sorts of investors typically to get a lot of shares in these offerings.
So how's the calendar look for the remainder of the year?
Yeah, so we're seeing a reasonable pace of IPO filings that are suggesting that, you know, we'll have a pretty solid amount of IPOs. I think by the end of the year, we might get somewhere between, I'm going to say, 20 to 40 pricing, but say from next week to the end of the year. The problem is when you get through to November, December, you do have some calendar disruptions because of holidays and the like. But so the real prime period to push ahead here is September, October, and obviously the bankers are hoping the market holds up through that period as well.
All right, Anthony Hughes, we'll keep an eye on some of these IPOs. Again, Klarna Group, one of the ones filing today, fintech company. And as Anthony said, you got to have one of those buzzwords, AI, crypto, fintech, something kind of in your story to get the attention of the IPO market, which is not unusual. There's always flavors of the day out there for the IPO market. Anthony Hughes, Equity Capital Markets reporter for Bloomberg News, joining us live here in our Bloomberg Interactive Brokers studio. Looking at the markets here, still red on the screen, down at the lows of the day. The S&P's down 1.5%, the NASDAQ down 1.9%. All right, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Stay with us. Your top stories and global business headlines are coming up right now. Looking at the yield space, we got yields higher, up about 5 basis points. Your 10 years, 4.27%. Coming up, more Bloomberg Radio. This is Bloomberg.
This is CBS News on the Hour, sponsored by ZipRecruiter.
I'm Steve Kathan. California's challenge to the Trump administration's summer troop deployment in Los Angeles succeeds in federal court. CBS's Jake Rosen.
In a 52-page ruling, U.S. District Judge Charles Breyer found that the president and his administration violated the Posse Comitatus Act, an 1878 law that prohibits the use of the military for domestic law enforcement. Breyer blocked the Trump administration from deploying or using the National Guard currently deployed in California or any military troops in the state for civilian law enforcement.
But the judge said the troops still remaining don't have to leave. On social media today, President Trump called Chicago the most dangerous city. He's considering federal action there. Now to Washington, correspondent Nicole Killian reports Congress is back with action needed soon to head off a possible government shutdown.
You have a lot of concern with the, quote, big, beautiful bill that Congress passed as well. Obviously, that was a Republican bill, but Democrats remain concerned about those cuts to Medicaid and SNAP and really feel that this could be an opportunity with respect to government funding to try to leverage some of those issues to try to maybe restore some of that funding.
Overseas, a landslide wiped out an entire village in Sudan's Darfur region, and a rebel group controlling the area is appealing for international aid. CBS's Ramy Inocencio.
Local sources indicate that between 300 and 1,000 people may have been killed, and if it does end up being at that top end, then that would make this landslide one of Sudan's deadliest natural disasters in modern times.
There have been powerful aftershocks reported today near the epicenter of a major earthquake in Afghanistan, where the death toll tops 1,400. Jerusalem reporter Linda Gradstein tells us additional forces have been called up in Israel.
The call-up of reserves comes as Israel prepares to take over Gaza City after ordering the 1 million Palestinians who live there to move to safe zones in the south of Gaza. Hebrew media report that many reservists have requested exemptions for personal or financial reasons, and units are seeing lower turnout than in previous emergency call-ups.
A stock market dip today is being blamed on Friday's court ruling against President Trump's tariffs. Strategist Michael Farr.
There could be a court challenge to President Trump's tariffs, and that many of the revenues collected would have to be returned. That was unwelcome news for markets this morning that really do hate uncertainty.
Right now, the Dow Jones Industrial Average is down 540 points. This is CBS News. We now learn a familiar Starbucks drink almost had a different name.
Peter Dukes created the pumpkin spice latte back in 2003, but he told People magazine back then pumpkin flavored things weren't that popular, so they almost went with another name instead, the Fall Harvest Latte. But they ultimately decided to give the PSL a go, and while it was well liked at first, it really became a cult favorite years later when it blew up on social media.
Come on, it's pumpkin spice time. When it comes
comes to fall, I'm about as basic as it gets.
Imagine ordering a Grande FHL with extra whip. Doesn't quite have the same ring to it. Stacey Lynn, CBS News.
Kraft Heinz is splitting into two companies a decade after a merger of those brands created one of the biggest food makers around. Company says the move is designed to capitalize on new consumer trends. I'm Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
They're back. Welcome to the Tuesday edition as lawmakers fly into Washington from around the country with only 14 working days to avoid a government shutdown. What could go wrong? We're going to run the odds and look at the obstacles with Nathan Dean from Bloomberg Intelligence in just a couple of moments as President Xi sends a message to the U.S., appearing alongside Vladimir Putin and India's Prime Minister Modi as he attempts to rewrite the geopolitical map. We're going to talk about this important moment with Adam Ferrer at Bloomberg Economics. We'll have analysis from our political panel. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us as President Trump's global tariffs are ruled illegal by a federal appeals court. We've got a lot to talk about, and we start, as always, with a look at the markets, Wall Street, and a Bloomberg Business Flash now with Lisa Mateo. How's it look, Lisa?
Not too bad, Joe. Right now, Wall Street, they're returning from the long holiday weekend. It's a sour note. This week, traders are looking ahead to key labor market data for any clues on economic growth, the Federal Reserve's policy outlook. So let's get right to it. We have the NASDAQ down more than 1.5%, 397 points. The S&P 500 off about 1.5%, 96 points, and the Dow off more than 1%, 551 points. Heading over to the yield space, we have the 2-year, 3.65%. That's up 3 basis points. The yield on the 10-year, 4.28%, and that's up about 5 basis points. To commodities, gold hit a record. Let's check in with COMEX Gold. It's now up more than 2% at $3,587 an ounce. That's on rate cut bets. Then we have oil on the rise. Brent crude up $68 a barrel. That's up about 1%. And the Bloomberg Dollar Spot Index up about 0.4%. Few companies making news. We have Kraft Heinz. They're saying they plan to split into 2 publicly traded companies. One firm, including Heinz Ketchup, the other condiments and boxed meals. The second company, that will include slower growing grocery products, things like Oscar Mayer hot dogs, Lunchables. Their shares, well, they're down about 6.5%. And activist investor Elliott Investment Management, well, it has built a $4 billion stake in PepsiCo with plans to call for changes at the firm. The move makes Elliott one of PepsiCo's largest investors. PepsiCo shares, they're up about 2%. And the U.S. has pulled Taiwan Semiconductor Manufacturing's waiver to freely ship essential gear to its main Chinese chip-making base. TSMC, their shares down, ADRs down more than 1.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is a Bloomberg Business Flash.
All right, what a treat to have Lisa Mateo along for the ride here on the Monday edition. No, it's Tuesday. Feels like a Monday edition of Balance of Power. I hope you had a long weekend. It's the big re-entry day here in the nation's capital and probably in your town as well if you're not with us here in the newly safe version of Washington, D.C. It's kind of a back to school, back to work, back to Congress situation here. It's fly-in day in Washington. It's going to be awfully busy at Reagan National Airport with lawmakers streaming in from around the country. And we're going to be talking to Nathan Dean in just a moment here about what is on the agenda and whether we can avoid a shutdown, because that's all anybody's going to be talking about, well, starting right now for the rest of the month. But you can tell something's different in the air, right? The light is a little bit different. The school bus is rolling by, the group of kids on my front yard this morning, and the traffic. I don't know how you did this morning, but it took me twice as long to get in as it did on Friday because it's on. It's the fall season. There's pumpkin spice in the air. In fact, Starbucks, did you hear that story? Producer James just put this in front of me. The best sales week ever? Yeah, record sales week, thanks to the pumpkin spice. And we've got headlines on the terminal here. Starbucks CEO, pumpkin spice season drove record sales week. Stand by for the protein cold foam. That comes out at the end of the month, September 29. I don't know about this. Maybe the biggest sign of them all was the return of the fleece vest that will someday hang next to Fonzie's jacket in the Smithsonian. Nathan Dean's Bloomberg Intelligence Fleece vest. We're on YouTube right now. Search Bloomberg Business News Live, and you'll see what I'm talking about. You can always watch the radio show on TV. Nathan Dean, of course, senior U.S. policy analyst at Bloomberg Intelligence. And it's the fleece vest that really is the reason why we call him America's dad. Welcome back, sir. Happy fall.
Happy fall.
You a pumpkin spice guy?
I am. I usually do 1 or 2 a season.
1 or 2 a season,
Yeah.
so not really a fanatic.
I got to lose some weight. They're pretty bad for
I mean,
you.
in August, we're doing record sales week. In August with the pumpkin, it does seem to be something. The other thing that comes with fall, apparently, is a government shutdown. Now, you've been running odds on this, and I want to talk to you about this because lawmakers are coming back with what they think is an agenda, and it could be interrupted by a lot of things, beginning with this. There are 14 legislative days left, Nathan. What does that do to the odds?
So we're at a 40% chance of 40% chance of a shutdown.
Okay.
I want to make sure I got that right.
Good.
40% chance of a shutdown. Now, the reason being is that if you look at the goals of each party going into this, the rhetoric is going to be high. You've got a rescissions package. Democrats are not going to like that. You have Republicans going out there saying that we want to have more cuts. Democrats are not going to like that. You have Democrats who also want to be seen fighting President Trump. But at the end of the day, we still don't think that there's going to be a shutdown because we don't see the reason why the political parties would get gains out of this.
Yep.
What I would say is that the Democrats, we have a long way between now and the election. And, it's one of those things where if they don't come together and create a deal, it's not going to really hurt them right now. I just say that we'll see this in December.
If not a shutdown, a CR. So it's a CR to December. Some are talking again about a year-long CR, which a lot of lawmakers have an allergy to, and certainly the defense hawks do as well. They're actually marking up bills this week. There's no way they get the 12 spending bills done, so it becomes a continuing resolution. Why December? Because of the deadline? The holiday creates the pressure?
Well, don't get me wrong. These funding fights, these are great opportunities. Like, look, if I'm a policymaker and I want to get something done, I don't want to have a 1-year continuing resolution. Let's call this case in point. One of the things that we've been telling our clients to watch out for is Senator Durbin's Credit Card Competition Act bill. It hasn't been offered on the floor, but there is a greater than 0% chance that Senator Durbin and co-sponsor Senator Marshall try to attach this either to the NDAA or to our government funding fight, because these are great chances to try and push policy and bypass a lot of time and rhetoric. So if you're in the credit card space, if you're looking at Visa and MasterCard, something to keep in mind. So if I'm a politician, I'm looking at this through the guys wanting to try and score political points, let's not have a 1-year CR. And I should just say is that if we get into a situation where like December or March, where both parties are saying, look, maybe we should have a government shutdown, the party that always is seen instigating the political the shutdown is the one that pays the political price. Now, we're a long way from November of next year. I mean, we're not, when we get to next summer, chances are government shutdown isn't going to be what people are thinking about voting-wise.
Yes, right.
But momentum is certainly a real thing. Momentum needs to build. And so that's why I do think at the end of the day, the Democrats, will face this decision of, do we want to keep the government open? Because if you don't, I could see a scenario where the Republicans come back and say, fine, 85% of the government is now not essential.
Yeah.
And let's try running it for 6 months and see what happens.
Russ Vought has a plan for that.
Exactly.
From what we understand. I think you mentioned that. The Democrat from Connecticut sees it differently. Chris Murphy, the senator, on Twitter, on X. Trump, he writes, is rooting for a shutdown. He knows he has created a huge problem because now any budget deal with Republicans isn't worth the paper it's written on. He's not even pretending to follow the law. Is he talking about rescissions? He's talking about the big, beautiful bill?
He's talking about rescissions. Yep. I mean, obviously, last Friday we had a rescissions rescissions package come in from OMB. This is $4.9 billion. Most of it is geared towards foreign aid. And for what it's worth, I don't think this rescissions package is the one that would push Democrats to say, is enough is enough. Let's go to a government shutdown.
They said that after the last one, I thought.
They would, but when it comes to foreign aid, it's a little bit different. I think if you're actually paying, if you're trying to rescind stuff, and for those of you who don't know, this is essentially an offer from the White House going to Congress and saying, look, Congress has already approved this money. We want to rescind it, and you can get it through a vote in the House, majority, and majority vote in the Senate, no filibuster. And this is what happened earlier ago. Now, you've seen Senator Murkowski and Senator Collins come out and say, we don't like this. But again, this is one of those things where if Congress doesn't resolve it, and if Congress shuts down on September 30th, this rescissions package is known as a pocket rescissions, and it just moves forward. I don't think it's going to rise to the issue of the Democrats are going to put their flag on the ground and say, this is it, because foreign aid is a little bit different than things that impact your constituents. Think of the Medicaid cuts that came from the One Big Beautiful Bill. That's what the Democrats want to be fighting.
Well, it was NPR and PBS in the last one that was said to be a deal breaker. The Democrats say, how can we trust you if we thought we had a deal, we voted to approve the money, and then you came and clawed it back?
Well, but that's why you do the continuing resolution. If you don't trust the White House, come up with these short-term extensions and just try and keep the funding flat. And I think that's where ultimately this is going to happen, because if the Republicans come in saying that we want to cut funding, whoever comes back and says we're going to agree to a funding flat CR, minimum changes, but at the end of the day, also remember, President Trump wants $2 billion for Washington, D.C. There's a lot of things that President Trump wants on the revenue side from these deals as well.
Interesting. We've mentioned rescissions a couple of times. We have to fund the government. What else is on the agenda? Are we going to see a stock trading ban, for instance, see the light of day?
You know, we're actually seeing a little bit more momentum. This is the legislation that would ban Congress people from trading stocks. You know, it seems like there's a little bit more momentum building on that, but I would just caution and say, look, things don't happen fairly quickly unless they have to. And the only thing that's keeping the government working right now, or at least working towards, you know, trying to get something done, is this government funding, the NDAA, extending programs like the Farm Bill, the National Flood Insurance Program. You know, there's a couple of things that have to be extended. Those are the things that Congress is going to focus on. Everything else is going to get pushed to October.
I have to ask you about cannabis because you're here and we tend to touch this. And there's a big question about rescheduling that we've been getting to on the regular here. Roger Stone writes the big op-ed last week that had your phone ringing. People wanting to know if we need to take this seriously or not. Of course, this is a longtime friend, supporter, advisor of and to Donald Trump. And he writes, if Trump makes the move to reschedule cannabis, he will be bringing Washington in line with the American people. It was an op-ed in Marijuana Moment. Does he have the president's ear on this?
He has one of the president's ears. And what I mean by that is, let's go back
Who's
to
got the other one?
Well, let's go back to President Trump's question in the press, the press conference.
Yeah.
You know, he said, well, I think, and I'm paraphrasing here, I think there's a lot of good things that can come from reschedulization, but I've also heard a lot of negative things. And so for us, what I'm telling my clients is, look, anticipate a decision coming from the White House that has positive tones for the marijuana industry. But again, I think it goes back to this process is that the DEA is the one that's going to drive it. I think it's going to take time, and I don't think it's going to happen in 2025. But, you know, there's a decent chance it could happen in 2026.
He's got a very concerned DEA on his hands, is the answer, right?
Yeah,
that's the tempering effect.
Obviously, anecdotally, you've heard the DEA staff is not on board with this. And then Terrence Cole, the administrator, is, has 30 years of anti-marijuana positions.
You've also got some Republican lawmakers who don't love this idea either. So we'll keep chewing on this in the meantime. And if there's another rescissions bill, you'll hear it from this man right here. America's dad, Nathan Dean, with the most famous fleece vest in America, the BI fleece vest. One of these days, I'm going to get some of that BI swag. I feel like the gift shop needs to happen. I'm Joe Matthew in Washington. Thanks for coming in. It's the Tuesday, feels like a Monday edition of Balance of Power. We're going to turn to geopolitics coming up. Did you see President Xi, Vladimir Putin, Prime Minister Modi shaking hands, laughing? Is this the new world order? We'll have that next on Bloom.
It is 12:21 on Wall Street. I'm Lisa Mateo. Wall Street kicking off September, trading lower. Right now, the NASDAQ down more than 1.5%, 365 points. The Dow off about 1%, 500 points. And the S&P 500 down more than 1%, 89 points. The two-year yield's 3.65%. That's up 3 basis points. The yield on the 10-year, 4.27%, and that's up 4 basis points. We have the Bloomberg Dollar Spot Index. That's up about 0.5%. On the economic calendar, traders are turning to key jobs data out later this week. Ahead of it, though, today, U.S. factory activity, that shrank in August to 48.7 for a 6th straight month. That's driven by a pullback in production. The Institute for Supply Management's manufacturing index, well, that saw a slight improvement from 48 in July. In other news, Jane Street pulled in a record $10.1 billion in net trading revenue in the second quarter, beating out all of Wall Street's biggest banks. And it looks like consumers continue to spend on jewelry. Signet Jewelers, that's the owner of Zales and Jared chains. Well, they raised their full-year sales guidance ahead of the upcoming engagement season. Its shares are up about 1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is your Bloomberg Business Flash.
All right, Lisa Mateo, thank you so much. I'm Joe Matthew in Washington. This is Balance of Power, the early edition on a Tuesday. Bloomberg Radio, satellite radio, channel 121, and you can watch the radio on TV by going to Bloomberg Originals or to YouTube. Search Bloomberg Business News Live. For this program or all of our shows that come from Washington and New York throughout the day. It's the coolest thing. I've said this before that we've got going. You can pause it. You can back it up when you want to hear exactly what Peter Navarro just said. He was speaking yesterday, in a big day yesterday. The optics in geopolitics were striking. Putin, Modi, that alone is an item. Add President Xi, and you've got quite a story here. They were shaking hands, they were hugging, they were laughing. And a striking answer to the summit that we saw in Alaska. Peter Navarro, the president's trade advisor, was out at the sticks in the White House driveway talking about trade with India. You know, we are now looking at a 50% tariff on India. And the last time we spoke with Peter here in this studio, it was unclear whether we were actually still in talks with India, having seen negotiations break down. That's what he had to say in the driveway at the White House yesterday. Listen.
It was a shame to see Modi getting in bed as the leader of the biggest democracy in the world with the two biggest authoritarian dictators in the world, in Putin and Xi Jinping. That doesn't make any sense.
The Shanghai Cooperation Organization, the SCO, the Eurasian Security Grouping, met on Monday alongside the heads of state from these other countries, which is why we found this remarkable collection of people. And it's brought a really great piece of reporting to the terminal here as we look at the big picture with questions about redrawing the geopolitical map as we know it. China's Xi redraws geopolitical map with embrace of Putin and Modi. Adam Ferrer covers all of this for a living at Bloomberg Economics, where he is senior geoeconomics analyst for the Asia Pacific. It's great to see you. Welcome back. I hope you had a great weekend.
Yeah, good to be here.
Because we're trying to understand really what's happening here, the redrawing of geopolitical lines. It was only a couple of days ago Peter Navarro sat here and referred to Modi's war, remembering that the 25% that was added on here to bring it to 50 was punishment for India buying Russian oil. Now we find them together in a literal embrace. Did the U.S. push India there?
So the imagery was stark, as you've walked through, not only individually between Modi and President Xi of China, but obviously President Putin of Russia, hand in hand, talking, laughing. President Modi, or Prime Minister Modi, also took a ride, and President
he got an hour in the limousine.
In the limo.
Putin wanted to top Trump on that, right? They only got 5 minutes of the piece.
That's right. Potentially, I mean, what's clear is that Modi is demonstrating his freedom of action, his own autonomy, and the fact that India has other choices out there, not just the United States. And the timing of this summit, which has obviously been on the books for a long period of time, gave him that opportunity to demonstrate that there were other options. Now, to be clear, though, the scope of his discussions with both Russia and China were far more limited than the pictures would let us believe, particularly when we look at China, a country that India Indian soldiers have actually gone to blows with as recently as just a few years ago, that has deep structural problems in their relationship. Deep concerns about competition that China has about India's growing economy, and India's concern about China dominating its economy and limiting its autonomy in the region, both as a security partner and as an economic entity. And so with that in mind, this was a tactical shift on Modi's part, not a strategic shift in terms of realignment with President Xi in the long term. And when we look at the announcements, actually the substance of what came out of this, we saw very little, right? We saw talk of returning to direct flights between China and India. We saw some discussion of smaller levels of border trade, but that's the level that we're talking about. Despite those pictures, there's still a lot to do. And with Russia, we saw a much friendlier relationship, right? Putin and Modi see themselves as strategic partners and have for some time. Modi was demonstrating directly, a pushback against the White House, that he could still have his relationship and that he was going to continue to buy oil and trade with Moscow. And all of that designed for both the domestic audience and for those in Washington to understand that they can't push him around.
Well, it's really interesting that the White House was having this conversation last week ahead of this taking place. And I want to go back to what Peter Navarro said here on the program when he was referring to India purchasing Russian oil to the benefit of Moscow and its war machine in Ukraine. Here's what he said.
Everybody in America loses because of what India is doing. The consumers and businesses and everything lose, and workers lose because India's high tariffs cost us jobs and factories and income and higher wages. And then the taxpayers lose because we got to fund Modi's war.
We've got to fund Modi's war. What role, just backing away a little bit from the specifics of what he just said, is the war in Ukraine playing in this relationship?
So the reality for Modi is that Ukraine is not front of mind, right? He's thinking about...
It's a non sequitur.
It's a separate discussion.
But people see them laughing and shaking hands thinking that, these bad guys were funding the war. Prime Minister Modi is simply looking for the cheapest oil for as many people as he can. Is it as simple as that? How about President Xi?
So for both of them, oil prices are important, right? I mean, it makes up a large portion of their need. Both of them are very dependent on energy imports. And as you said, for Modi, this is about cheap oil. It is about a broader strategic relationship with a key defense partner in Russia. But Modi has tried to work his way in the middle, maintaining a strong relationship and developing a relationship with Ukraine and Russia, and even trying at times to try to push for that peace agreement, but not risking his own political capital to do so. Beijing is in a very different position, right? Following Russia's broader invasion of Ukraine, Beijing stepped in to support Moscow as Western sanctions really started to cripple the economy and has now become its primary and principal economic and security partner globally. And so this meeting with President Xi and President Putin was yet another moment for them to highlight that that relationship isn't changing and that they're going to continue to grow what has become a over $250 billion trading relationship and a key lifeline for Moscow as it continues to conduct its war in Ukraine.
I've only got a minute, Adam, but I'm just wondering what happened to your phone, what happened at your desk on Friday a little after 5 o'clock when the appeals court ruled along with the International Trade Court to say that most all of Donald Trump's tariff regime is illegal.
So I think this didn't catch many of us by surprise. Based on the arguments that were put forward before, there was an understanding that the court was likely to rule that the president exceeded his authority under IEEPA to put these tariffs in place.
Ruling.
That said, across our, people we're talking to and what we're hearing from, other global partners is that there's an expectation that Trump is committed to these tariffs, that he's going to find a way to get those tariffs in place, whether it's through IEEPA or through a variety of other mechanisms.
So just replace the emergency and it's a different
Yeah,
conversation.
but that said, uncertainty looms large again, right? While tariffs might come back, at what rate? On what goods and how will they be implemented? So, and throw on top of that this question of whether they'd have to refund all of the tariffs they brought in. And, there's some really big questions left with
You may not want to be spending that money right now. Adam, it's great to see you. Thank you so much. It's always a smart conversation with Adam Farrar, Bloomberg Economics. And it's exactly what Adam was just talking about, the uncertainty. The very reason we wanted to talk to Christine Aquino, managing editor for Bloomberg Markets Live blog. This is the person who's got the minute-by-minute breakdown on stock trading. And the last time I looked, we were pretty close to our lows of the session here. We woke up with a 500-point decline right out of the gate on the Dow. The S&P 500 is down almost 100 points, 1.5%. Christine, uncertainty is the word here, because you'd think that tariffs going away might make the market happy, but the fact is we don't know again.
Absolutely, Joe. Again, markets are back in limbo, and that is ultimately what they're allergic to when it comes to all of these policy developments, right? I mean, the impact of the policy is one thing, but just questions over how it's going to be implemented, when it's going to be implemented, and now whether it's going to be implemented, given the questions over the legality of all of this. I mean, this is exactly the type of stuff that investors don't like to see, and this is exactly what we're seeing. And combined with the seasonal weakness that we do tend to see in markets in September, it really just makes for a recipe for bad news. And this is exactly what we're seeing in both stock and bond markets today.
Well, I'm glad you mentioned the seasonality. So tell our listeners and viewers what we might be in for here, because you've got a market that some would suggest is priced for perfection, certainly one that's near record highs. And we just learned a lot in what's at least left of this earnings reporting season. Are we begging for a little correction here?
It certainly seems that way, Joe. Yeah, absolutely. Just because, as you mentioned, stocks enter September priced for perfection. And we already got some whispers, for instance, of some of the big themes, right, that have been driving equities in the first 8 months of the year. That is still that AI tech theme. But we did get a signal from NVIDIA that growth in that space will be moderating over the next few years. I mean, and it's inevitable that it can't just keep growing at a record pace year after year. And so there's that realization at a time when the valuations, even though they've come down from record highs, are still pretty lofty. And then you add in uncertainty over what's going to happen to the Federal Reserve, both in terms of its personnel and also the policy meeting that we're going to see on September 17th. Is there going to be a rate cut? Or if not, what the rate path looks like for the rest of the year. Throw all of these in together, and this is what we get for a September back-to-school reality check.
Oh, you had to remind me. I know. It kind of. Do you feel like it's back to school today? It's not like we weren't at work already, but I feel like I'm stressed out to go back to work and school. How about this Bank of America call? This is something else, considering the backdrop that you just painted, Christine, in our remaining moment. The S&P 500 to hit 9,914 by September 27, 52% higher from these levels. What are they drinking at B of A?
Listen, they're obviously drinking optimism juice over there, and I would like some if that's possible. But again, you know, there will always be equity bulls in this market. That's never going to be a shortage. But perhaps what we're seeing is just a short-term correction. It really remains to be seen. But every time we do see something like this, there will always be people willing to buy.
Well, I guess so. I'll take what they're having. Pass the optimism juice around up there in New York. Christine, it's great to have you. Come on more often. Christine Aquino, managing editor for the Bloomberg Markets Live blog that you rely on every day. We'll assemble our panel next. They're back together, Jeannie Shanzano and Rick Davis off the long weekend, and only here on Bloomberg.
is 12:40 on Wall Street. I'm Lisa Mateo. Tech stocks leading the losses. We have the Nasdaq down more than 1.5%, 369 points. Checking with NVIDIA shares. Those shares, they're down nearly 3.5%. Let's move on to the Dow. Down more than 1%, 499 points. The S&P 500 up down more than 1%, 89 points. In the yield space, the 2-year 3.65%. That's up 3 basis points. The yield on the 10-year, we have 4.27%, and that's up about 5 basis points. To commodities, WTI crude $65 a barrel, with COMEX gold $3,591 an ounce. The Bloomberg Dollar Spot Index up about 0.5%. Japanese yen down 0.7%. We have the euro down about 0.5%. Treasury Secretary Scott Bessent, he tells the Washington Examiner President Trump may declare a national housing emergency this fall. So because of that, we're keeping an eye on some home building stocks. We look at D.R. Horton, they're up about 0.4%, but you look at Lennar down 0.6%. Installed building products down more than 1.5%. And Dreamfinder's Home, they're down more than 1.5%. And low-cost Frontier, flying high. Their shares up 13%. Deutsche Bank raised the recommendation of the carrier to buy from hold, saying it's best positioned to benefit from that Spirit bankruptcy. Sumitomo-led group will buy aviation finance firm Air Lease for about $7.4 billion in cash. And finally, Elon Musk, he is predicting Tesla will derive about 80% of its value from humanoid robot Optimus. It's an initiative he first talked about 4 years ago. Now, meanwhile, deliveries from Tesla's Shanghai factory extended their slump in August. For on-demand news 24 hours a day, you can subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is your Bloomberg Business Flash.
Lisa Mateo, thank you so much. I'm Joe Matthew. This is Balance of Power, live on Bloomberg Radio, on the satellite radio. We're channel 121. Hear all of our shows all day on Sirius XM, or watch them on Bloomberg Originals or YouTube as well. Search Bloomberg Business News Live to watch the radio on TV. We'll welcome our global television audience to the conversation in just about 20 minutes. And Kriti Gupta is going to be joining us here in Washington as well. President Trump on social media Sunday evening, in case you were wondering, all caps, never been in better shape, he writes. After several days of speculation about the president's health, and if you were on social media, you saw exactly what I saw. Somehow people speculating that he may have died. That was the conversation over the weekend, because he didn't appear in public for 3 days. By the way, there were pictures of him, I think on all those days, doing one thing or another. He was playing golf, and was out over the weekend. But this has become a social media phenomenon. And I'm wondering if it speaks to the cadence that Donald Trump already has, the true level of overexposure that he has in front of the cameras for hours. Remember, we started last week with a 3-hour and 17-minute long cabinet meeting. As the playbook pointed out, that's longer than The Godfather. So the man goes away for 2 days or something, and you've got social media and the internet melting down over whether or not he's alive. This morning on the Drudge Report, Don's attempt to dismiss health concerns backfires. I'm pretty sure it actually was he's fine. But there have been a lot of images of bruising on his hand, right? The swelling that he has seen in his ankles. And we hear a lot about the fact that he looks tired sometimes. And this is interesting, because we're coming off the Biden administration, when public events were not a guarantee every day. And the fact that he was aging was something that we were all accepting at the time. Donald Trump is just a different animal. And it's where we start our conversation with our political panel. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano, both back with us off the weekend. Jeannie is Democracy Visiting Fellow at Harvard Kennedy School's Ash Center. And Rick is our Republican strategist partner at Stone Court Capital. I want to talk to you about the congressional agenda, guys, and a lot of things here. I don't want to belabor this too much because it wasn't real. But, Rick, I'm wondering about the optics behind this, and if it speaks more to just the insanity of social media and kind of the gossip-driven world that we're in, or the expectation that Donald Trump has created for himself to be before cameras every day. What do you think?
Yeah, that's a really good point, Joe. I mean, when you feed the beast like he does, and really enjoys it, obviously, hours and hours a day, as you point out, the 3-hour cabinet meeting was just an example. I mean, there have been pressers that lasted 4 hours. But like they say, you live by the digital, and sometimes you die in the digital. And so digital buried him this weekend. I hope he had a good round, but he's back with a furious intent, today.
Yeah. You better believe it. He's going to be making an announcement right after we get off the air. Not entirely sure what he's got up his sleeve, but he will be before cameras again today. Jeannie, what do you make of this? Is this some sort of hangover from the Biden administration?
Well, Joe, I just can't get over the fact that on your 3-day weekend, you, Joe Matthew, didn't take a break and you just were on social media looking this stuff up.
Yeah, you didn't either.
I saw it too. By the way, the Drudge Report should start calling him President Trump, not Don. That's just my little beef. This was all over social media. I'm not sure. Maybe people were bored, but the man, to your point, did a 3.5-hour press conference on Monday. He never stops. He, too, deserves to go play a round of golf. There you have it. I think people are just bored and they miss him and they want him back. So 2 p.m. today, we may get him back.
That's right. He's never been in better shape, he says. And I'm pretty sure I couldn't play as many rounds of golf he does every week. So it's fly-in day. Here we go. Let's get back to the fun stuff. Lawmakers coming back, and they're probably really glad to be here, having spent a month in many cases being yelled at town hall meetings. I don't know what your expectations are, Rick, but the bar is pretty low. I won't even ask you about regular order because getting 12 spending bills done in 14 days is obviously not possible. Will Democrats and Republicans look at each other and say, we can't do this. We can't shut it down. Let's pass a CR to get us through the end of the year?
I don't know. Politics is pretty depressing on Capitol Hill these days. The good news is we start the week with a nice bipartisan effort to pass the NDAA, the big defense authorization bill that typically passes when nothing else does, which could be the case this year. And that will set a positive tone in the United States Senate this week, where Democrats and Republicans overwhelmingly will support this bill. And maybe that sets a tone for the balance of the confirmations and the budgets and just the incredible amount of work that is stacked up because of an early holiday. And so we'll see. I think that anybody who's betting on this being a functional Congress between now and the end of the month is making a bad bet.
Jeannie, there was a request for a meeting that Chuck Schumer and Hakeem Jeffries made with their Republican counterparts. I'm pretty sure it hasn't happened yet, but the Democratic leader in the Senate is out with one of his famous Dear Colleague letters, basically urging Republicans to pass bipartisan legislation and reject further rescissions, both of which could get you a laugh in certain quarters here in Washington right now. I think it was Brendan Boyle, the top Democrat on the Budget Committee, who said on this program, one more rescissions package and we're done. We will not vote for any Republican spending measure. And well, we've got one coming. So 14 legislative days will produce what for the American people, Jeannie?
Well, it is anybody's guess at this point. A lot of this, I think this is a big moment for Democrats, to your point about this Dear Colleague letter that is out from Schumer and Jeffries. They are claiming that they are on the same page. They are working together, but reading it, I'm not clear what the strategy is. And that's the big issue here. What is the strategy of the Democratic leadership, and can they pull their caucuses along, and do they stick with it? Because we saw the last time around, they diverted. There was a lot of tension between Hakeem Jeffries in the House, Chuck Schumer in the Senate. He allowed the GOP to go forward with government funding, much to the frustration, not only of the members of the House and Jeffries, but to the Democratic base. And I think Chuck Schumer has likely learned a lesson from that. We probably won't see that. But again, it's still unclear. But in their defense, it's hard to be clear on your strategy when you don't know what the Republicans are going to do. Last week, the White House was calling for a clean CR with very little details as to what they mean by clean, what the time frame is going to be. So, I mean, it's hard to counter a strategy when there is no strategy put forward. So I do think they all need to meet, but we haven't seen a meeting set yet. And of course, to your point, there's only 14 days and we shut down by the 30th of September.
Well, Chuck Schumer writes in this letter that instead of keeping even his most basic commitments, like releasing the Epstein files, Trump stonewalls, foments fear, attacks critics, and hurls lies to distract from his failures. We got to the Epstein files, Rick, in the second paragraph in the letter here, and it's a pretty long one. And the fact is the House Oversight Committee is today meeting in private with victims of Jeffrey Epstein, and you've got a discharge petition out there with a D and an R on it, Massey and Khanna, that they say will get the numbers to 218 to bring this to the floor and require the release of the so-called Epstein files. How quickly did we get bogged down in all of this fall? Are we picking up right where we left off?
Yeah, a little bit. I mean, we saw that the speaker, basically told everybody to go home in order to avoid this issue of Epstein and the vote that you mentioned. And yet, during the break, he was quoted on many shows saying, a lot of very positive things about the investigation that Comer is doing and the need for transparency, and didn't outright say that he opposed the discharge petition. So, but I think it's a sideshow compared to the importance of the federal budget. And so these two things will happen, I think, along a parallel line. I would say Schumer, to me, does have a plan. I don't think that there's anything much in his category other than the insurance subsidy for ACA expires with the end of this budget, and he desperately wants to re-up that, and he'll deal away whatever he needs to do to keep ACA whole. And this affects 4 million people, most of which are probably Democrats. So I think he's just setting up the big bargain.
How about, remember Rick said that those Obamacare subsidies are going to be a huge deal as we get closer to the end of the year. Jeannie, I don't know your thoughts on this, but when Tom Massey and Ro Khanna are on the same page, it does make you wonder if something's about to happen. They've got a news conference planned tomorrow with about a dozen Epstein survivors who are in town for this oversight committee hearing. How loud is this going to get?
It's going to get very loud. I mean, all attempts to quell this by leaving early have obviously failed. The reason this is still resonating is because representatives and senators are hearing from constituents. And as you mentioned, tomorrow we have a big press conference with victims, which they are hoping lights a fire under some of these Republicans. And then we had today the speaker come out with a competing resolution. So he is hoping that he can pull over some of those Republicans and keep them from voting for the discharge petition. But we have a long way to go on this, because even in the best case scenario for Ro Khanna and Tom Massey, they get this passed. What happens? It's got to get passed by the Senate. We haven't seen a lot of support for it in the Senate. And then the president has to sign it. So it's a long way to go on this. But all it means is that this Epstein story is going to continue to dominate Washington for many, many weeks. And all efforts to put it by the wayside by releasing transcripts and other things have absolutely not worked. And when you have the victims coming to speak today behind closed doors and tomorrow publicly, that is going to get a lot of attention from particularly the Republican base.
Yeah, well, I don't doubt that. And the president will continue to be asked about it. Rick, is there anything else on the docket? We get one more rescissions package just to make everybody even more upset?
Well, the current pocket rescission is really the hot topic, and that's what's really angered the Democrats, because any deal they make on the federal budget, it could be rescinded without even a vote by Republicans. Yeah, so there's a lot of tension related to fiscal issues, and now you've got Speaker Johnson going out saying, well, maybe we're going to have another reconciliation bill. And I think a lot of Republicans I talked to over the weekend were like, oh my God, that's the last thing we need. So I think it could be a pretty heady October, getting ready for the end of the year, once we get past this current standoff on the budget by September 30th.
Yeah, I think it was Patrick McHenry who said on this program on Friday, October is going to be insane. Are you running odds on a shutdown, Jeannie? Just to be clear, we've got about a minute left. Do you agree with Rick that Chuck Schumer wants to make a deal on Obamacare by the end of the year, therefore we don't shut down?
I'm not sure, surprisingly, that I agree on that. I know Rick's right. He wants that. He is desperate for that. But the fact is, he's got a base which is angry and does not want him to deal with the Republicans. How can you, given that they just rescind what you deal with? So I'm not sure he's going to be able to do it even if he wants.
We're feeling the anger here in Washington, even though it's a beautiful day out. Did you get outside to smell the roses? Rick and Jeannie did. They'll be back in hour 2 of Balance of Power as we welcome our global television audience to the conversation. Stay with us right here only on Bloomberg.
Live from Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
Uncertainty returns, if it ever went away. Welcome to the Tuesday edition of Balance of Power as President Xi tries to rewrite the geopolitical map, just as an appeals court rules that most of the Trump tariff regime is illegal. I'm Joe Matthew alongside Kriti Gupta in Washington. We've got a lot to talk about today as lawmakers also return to town with just over a dozen working days to avoid a government shutdown. So it's back to work, back to school, and in your case, Kriti Gupta, back to the USA. Welcome.
Thank you so much for having me. I feel like the timing is perfect. It's almost like I planned it this way.
Well, you definitely picked a peculiar time to be here. We're counting down to a potential government shutdown at the end of this month. As I mentioned, tariffs are up in the air right now, and as lawmakers come back to deal with the Jeffrey Epstein story and everything else, we do have a lot of questions to answer around here. This tariff move, you must have been in the air somewhere between London and the United States when that happened. Has the markets a bit on edge today, too?
I mean, it feels like the markets have been on edge since Liberation Day, really, and they've been looking for a reason to really respond. And you would have thought that having that court appeals kind of work against Donald Trump would be a positive for these markets, and we're not seeing that today.
Well, we're not, because I guess we still don't know what's going to happen. He's going to keep appealing this and could rewrite the whole tariff regime. And so we want to start with the markets. As always, we'll bring you a live report from the White House coming up from Bloomberg's Tyler Kendall. We'll talk to Michelle Jamrisco about this fascinating session in China, the meeting in China, and Henrietta Levin will join us from the Center for Strategic and International Studies, all after a look at the markets. Lisa Mateo has that for us from World Headquarters in New York. Lisa, how's it look?
You got it, Joe and Kriti. Well, Wall Street kind of returning from the long holiday weekend on a down note. This week, traders, well, they're looking ahead to key labor market data, looking for any clues on economic growth, the path of interest rates. So right now, if we take a look at the NASDAQ, it's down more than 1.5%. We have the Dow down about 0.9%. The S&P 500 down more than 1%. In the yield space, we have the 2-year 3.65%. That's up 4 basis points. And the yield on the 10-year 4.27%, and that's up about 4 basis points. Over to commodities, we have COMEX gold. It hit a record right now at $3,591 an ounce. Over to oil, we'll go to WTI crude, up more than 2.5% at $65 a barrel. The Bloomberg Dollar Spot Index up about 0.4%. Checking with the British pound, down more than 1%. The euro down about 0.5%. The Japanese yen down about 0.7%. Few companies making news. We'll start with Anthropic. It has closed a deal to raise $13 billion from investors. It's a new funding round that nearly triples its valuation to $183 billion. Then Kraft Heinz, they say they plan to split into 2 publicly traded companies. One will include Heinz Ketchup and other condiments. The second's going to include slower growing grocery products. Shares, though, down more than 6.5%. Activist investor Elliott Investment Management, it's built a $4 billion stake in PepsiCo. And finally, the U.S. has pulled Taiwan's semiconductor manufacturing's waiver to freely ship those essential gear to its main Chinese chip-making base. For on-demand news 24 hours a day, you can subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash.
Lisa Mateo, thank you so much. Watching Wall Street for us. We'll get back to Lisa in New York about 20 minutes from now to check in on the Tuesday trade, even though we all want to say it's the Monday trade. Still reacting on this Tuesday, feels like a Monday session, to the news of late Friday. What we like to call the Friday news dump, in fact, came from an appeals court, and a pretty important ruling here that called into question the entire basis, the emergency status for President Trump's tariff regime. It would impact most, if not all, of those tariffs. And it coincides with a remarkable moment overseas, President Xi hosting Vladimir Putin and India's Prime Minister Modi for a visit that Bloomberg is asking whether is rewriting the geopolitical map as we know it. We're going to talk to Michelle Jamrisco about that in just a couple of minutes. But let's start at the White House. Bloomberg's Tyler Kendall is standing by on the North Lawn right now. We are expecting to hear from President Trump a little bit later on today. Tyler, what do you have?
Yeah, hey, Joe. So this ruling really is dominating the headlines after the weekend, though it did come out perhaps on the quiet end, considering that it was 5 p.m. Eastern on Friday night. Now, this really has to do with those tariffs enacted under IEEPA, the International Emergency Economic Powers Act, and the court found that President Trump violated his authority because, as you well know, in order to invoke IEEPA, the president had to declare a national emergency. So for those so-called reciprocal tariffs, he cited persistent global trade imbalances, and for those tariffs against Canada, Mexico, and partly on China, he cited concerns over the border and fentanyl. And I'm bringing this up because I would expect to hear a lot of messaging around this from the administration, as we are expecting the Treasury Secretary Scott Bessent as soon as today to file a brief to the Solicitor General, which means that the White House might have their sights set on appealing this all the way up to the Supreme Court. Now, I think it's worth mentioning here, Joe and Creedy, that historically the courts have really been deferential to presidents when it comes to their ability to invoke national emergencies. But at the same time, we've never seen a White House invoke IEEPA in order to impose tariffs, let alone ones that are so broad ranging. Now, I don't need to tell either of you that there are trillions of dollars at stake here when it comes to this decision. I was pretty struck by a recent analysis from the Committee for a Responsible Federal Budget, which found that if the Supreme Court upholds this ruling, 71% of the expected tariff revenue for this year would all but vanish. But that doesn't mean that tariffs or the revenue with them are going away completely. A person familiar tells us here at Bloomberg News that the administration is looking at other federal authorities to invoke tariffs going forward, even as they plan to appeal this ruling.
Tyler, you're talking about trillions really at stake here when it comes to this particular court ruling. Talk to us about how this bleeds into the corporate space. We know that the White House has been in the kind of back and tug of war, a little bit of love and hate when it comes to NVIDIA. Now another major chip company in the crosshairs. Walk us through it.
Right, exactly. And Creedy, you're highlighting really what we saw come to light today as that tension, that push and pull between this administration as well as chip makers. We saw them mirror a similar move to last week that impacted Samsung and SK Hynix, essentially revoking TSMC's authorization to freely ship essential gear to its mainland Chinese operation base. Now, the administration here has really highlighted these companies as ones that are willing to work with the White House. They've pledged to reshore manufacturing, but then on the other hand, you also have them now policing their actions abroad, and that could lead to some difficulties ahead. An administration official tells us here at Bloomberg News that U.S. officials alerted TSMC recently that they were going to revoke what's known as their validated end user status. Think of that sort of as a blanket permission, and now the company is going to need to essentially seek individual approvals. But we know that that could pose some difficulty considering that the U.S. is already dealing with a backlog of export licenses. All of this to say that it just adds some uncertainty to the picture here, particularly as the U.S. has been trying to court these chip makers to get on board with President Trump's reshoring and manufacturing vision.
Boy, there's a lot there, Tyler. Thank you so much from a beautiful North Lawn. On this first week of September, Bloomberg's Tyler Kendall at the White House. This TSMC headline is really something, Creedy. In the process of talking about reshoring, we're also talking about upsetting the Chinese at a period of time in which we were supposed to be in talks about a deal. That's where Michelle Jamrisco comes in with her expertise on the Global South with us now in Washington, D.C. Michelle, it's great to see you. Revoking Taiwan Semiconductor's authorization to freely ship essential gear to its main Chinese chip-making base, just as President Xi sits down with Prime Minister Modi and Vladimir Putin for a weekend of festivities ahead of the big military parade tomorrow. Bloomberg is writing about the redrawing of geopolitical lines. Is that what we're seeing?
Yeah, a lot to unpack from the weekend's events, especially with all three leaders,
Amazing
Presidents
optics.
Xi, Modi, and Putin, all kind of getting together at the, the Shanghai Cooperation Organization meetings, and had bilateral meetings as well. Yeah, you can call it a redrawing of the global map. I think we're seeing a lot of this sort of culminating energy around the sort of BRICS countries and others that are finding, the enemy of my enemy is my friend. They're coming together with this frustration over the Trump tariffs, and they're finding ways to resolve, or at least move to resolve, decades-old disputes that they have with each other. You saw it with Xi and Modi talking about resolving border disputes that came to blows at different times, and talking about counterterrorism operations, and building their own bilateral trade ties, restarting direct flights between their two countries, and all of it. I think what you can see among those three leaders is a sort of almost taunting signal to the U.S. These photos, these embraces, handshakes, smiles all over social media. Modi calling Putin, saying it was always a delight to meet with President Putin, all kind of meant to needle at President Trump, who has so far not taken the bait and typically likes to kind of pretend BRICS doesn't exist and doesn't have the power that it thinks it might have.
How much of this, though, is just a expansion of an economic relationship that really has already existed, especially when it comes to the likes of India and Russia, for example? Oil, defense, it feels like this has been in the works quite some time.
Yeah, I think in that case, it's certainly just a doubling down of their warm economic ties. We did see where, this is crossing into the Ukraine-Russia situation. Modi reportedly spoke with President Zelensky before his meeting with Putin, before leaving for that trip. And Zelensky had said that he was assured that India would bring the appropriate message, the appropriate signals to Russia in that. I'm not sure he got what he wanted out of that bilateral meeting that happened between Putin and Modi. But certainly that is an element here that they're playing, India and Russia are trying to play to their advantage, saying, we're not giving up these decades-old ties either, even though we might not agree on everything that goes on with the relationship and with the war itself. They're setting that aside. It's all economy and economic ties for them in those meetings.
The idea of Prime Minister Modi for 50 minutes in Vladimir Putin's limousine, after we saw Putin do the same with Trump for only 5 minutes, I'm sure it was not a coincidence. What were they talking about? What happened in that car?
And that's what I mean when I say, this is perhaps some sort of taunting signal. Our colleagues on the other side called it limo diplomacy. And as you mentioned, after this remarkable invitation by President Trump to have Putin in his vehicle, in the beast, as we call it, with all the security implications that sends, for Putin to turn around and then do the same for Modi at a time when both countries are having very tense relationships with the U.S. It certainly does send a sort of diplomatic signal in some ways. We don't know the details of what they discussed, but there's still plenty on the table between Modi and Putin, and certainly, I think how to kind of help together thwart the Trump tariff energy was probably top of the list.
Yeah. Well, Michelle, those are three key, of course, allies now in Asia as well. But the secondary sanctions bit is so interesting to me because this is something that Donald Trump has really taken a very fierce step forward on. You now have European leaders say they're going to be doing the same thing, especially when it comes to targeting China, India. It's been put out in the ether. Whether it actually happens is a different story. Right. How effective could that be?
Yeah, well, it'll certainly change the game because as to this point, we haven't had China be involved in that direct target of secondary sanctions, as we're awaiting certainly a leaders summit between Trump and Xi, a sort of thawing of that sort of trade relationship. And of course, we got the 90-day extension of the trade truce with China just last month, just a couple weeks ago. So there's kind of a holding pattern that we have right now between the U.S. and China. But India, as well as some others, are asking, well, why just us? If you're going to do secondary sanctions, what's going on with China? Why aren't you targeting them for these same penalties?
So let's talk about secondary tariffs, as the president put it at the time, secondary sanctions. The deadline just passed. It was a 50-day deadline. Remember that? We just passed it, I think, 2 days ago here, having been revised multiple times. There's no end in sight when it comes to the fighting. There's no actual deal or hope, it seems right now, for even a ceasefire. At what point do these secondary sanctions take effect?
Well, we certainly have a lot of overlapping deadlines.
That's
so I
true.
think you have
the
2-week deadline. We've got the 90-day truce with China. We've got deadlines that have been threatened. And as you know, Joe, the president is fond of saying in 2 weeks.
That's right.
Using that for many different issues. So we'll have to see how these kind of coalesce. I think we will probably hear from the president today in some form that speaks to the nature of these issues. He's been, I think, loath to comment directly on these leaders' meetings of the triumvirate of folks that we've been talking about today because, he doesn't want to lend credence to any leverage or power that gives them against the U.S. right now. So we'll have to see. I see where these other powers are kind of playing their own game, trying to play Trump off himself. And so we'll see how those conversations go. But obviously, when you have these conversations going on 3 different tracks with 3 different countries, and Trump wants to win them all, it's going to get a little sticky.
Yeah. Great analysis from Michelle Jamrisco, as always, balancing the White House and national security and the stories that she's reporting on and editing here in Washington, D.C. Creedy, let's assemble the panel. They're both with us today. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis. Rick is our Republican strategist and partner at Stone Court Capital, and Jeannie is a democracy visiting fellow at Harvard Kennedy School's Ash Center, Bloomberg Politics contributor, of course. I'd like to get into this with both of you. We've been talking about it for a couple of years with regard to the war in Ukraine, with regard to Russia, and of course America's relationship with China, which has evolved in interesting ways between both the Biden and the Trump administrations. Rick, what went through your mind when you saw these images from over the weekend? Putin, Xi, Modi hugging, laughing, talking together in China, not to mention Modi and Putin together in a vehicle for almost an hour. These lines are being rewritten before our eyes. Is it because of the Trump administration?
Well, you didn't see this kind of participation just a few years ago with these dialogues. So it is a troublesome situation. Troublesome that we don't have a better relationship today with India, somewhat sparked by the punitive tariffs that President Trump has put on them. But I'd point out another one. Turkey's Erdogan was there too, and he's a member of NATO. So we have a NATO member sitting in a group with, all of our global antagonists, and so it's got to be a warning shot for the Trump administration and their national security group to start getting serious about how they play these global affairs. Because even though America First says, oh, let them do whatever they want to do, this is not good for democracy and freedom around the world.
Jeannie, hop on in here in this conversation. I feel like we've been focusing so much on the negatives of this. Let me take my Debbie Doomsday hat off for a moment and put my positive one on. If we start to see relations between the United States thaw with either Putin, Xi, or with Modi, does that have a cascading effect on this trio?
It possibly could. And I wish, Gritty, I could join you and be optimistic, but I am so not. I think in terms of foreign policy, this administration just 8 months in, it has really been a disaster. You look at just the impact of the tariffs on our alliances. If you're going to confront and compete with China, the one thing you need is allies. You cannot win this competition without them. And what does he do? He goes and he inflicts tariffs on our closest allies, including, as you guys were just talking about, India, secondary tariffs. And of course, they thumb their nose at him, and Modi goes right over and is now with Xi Jinping and Putin. So yes, a thaw in relations could be beneficial, but I'm deeply worried that things have gotten too far now, and the president promising his promise about 24 hours he could, make Ukraine safe again, end the war. You look at what's going on in the Middle East, you look at our relationships with India, the entire world has now reconfigured or is in that process, even Japan meeting with Xi Jinping recently, and that's as a result of these policies. So I am not as optimistic, although I will try to be when I come back and talk to you next.
Ever the optimist. I don't know. It sounds to me like the secondary sanctions could have quite an impact right now, which is something that Rick Davis has been calling for a couple of years. Our great panel will be back with a lot more to talk about as we turn to domestic politics. Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors, with us here on the Tuesday, even though it feels like a Monday edition of Balance of Power. We'll take a look at Wall Street. Lisa Mateo checking stocks for us with a new whiff of uncertainty in the air over tariffs. And we've got Kriti Gupta with us today in Washington, D.C. And for the next several weeks, we'll be back with a lot more smart talk from Washington by way of Wall Street straight ahead. I'm Joe Matthew in the nation's capital, right here on Bloomberg TV and radio.
It is 1:21 on Wall Street. I'm Lisa Mateo. Some trade uncertainty in the air. Traders, the labor market data out later this week. The jobs report comes out on Friday. Ahead of it right now, stocks are lower. We have the NASDAQ down nearly 1.5%. The Dow off about 0.9%. The S&P 500 off more than 1%. The 2-year yield, 3.64%. That's up 3 basis points. The yield on the 10-year, 4.27%, and that's up about 4 basis points. We have the Bloomberg Dollar Spot Index. That's up about 0.5%. Checking with other currencies. The Japanese yen down 0.7%, the euro down 0.5%, the British pound down more than 1%. Some IPO news. Fintech company Klarna, some of its shareholders, they're looking to raise as much as $1.27 billion. This is as the company revives that New York IPO that was delayed earlier this year. Then we go to BlackRock Coffee Bars, looking to raise as much as $265 million in an IPO. It'll become the largest publicly traded coffee retailer on a U.S. exchange, joining rivals like Starbucks, and Dutch Brothers. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is your Bloomberg Business Flash.
Lisa Mateo with us today. Great to have you along for the ride, Lisa. I'm Joe Matthew in Washington, and this is Balance of Power. Alongside Kriti Gupta here in the nation's capital, in for Kaylee Lines. As we turn our attention to domestic politics, Kriti, we've been talking so much about the potential for National Guard troops or federal law enforcement to enter Chicago has been the next city that President Trump has highlighted here. Of course, they're on the streets of Washington, D.C. He's suggested other cities like New York might get that treatment next. All of this, of course, began in Los Angeles a couple of months ago.
And at the time, even when he was threatening Los Angeles, no one really took it that seriously. This was an unthinkable move in terms of troops, in terms of actually the legalities around it. And now we find out, well, it's actually not legal to do that.
Well, we did get a court ruling that's going to raise some real questions about going into other cities. The president has a lot of leeway here in Washington, D.C. in the federal city. It's not like that when you go into another state with an executive that actually is the commander-in-chief of the National Guard. So here we are, the judge ruling here that the president's deployment in L.A., this was in June, against the immigration crackdown, violated federal law, with much to wonder about the way forward. We assemble our political panel. Rick Davis and Jeannie Shanzano are both with us, Bloomberg Politics contributors here on the Tuesday edition. Rick is our Republican strategist and partner at Stone Court Capital. Jeannie, Democracy visiting fellow at Harvard Kennedy School's Ash Center and Bloomberg Politics contributor. You know, one thing, Jeannie, that Donald Trump has always said since he got back in the White House is that he will comply with court orders. Could this slow down the role of National Guard troops, if not federal law enforcement in other parts of the country?
You know, it absolutely could, but I'll tell you, I am doubtful that it is going to slow down this administration, and I'll tell you why. Very much like his imposition of the tariffs, which is something he has talked about almost his entire adult life. He has been fixated on violence in Chicago for much of his life. He built the Trump Tower there. He has talked about it since before he ran for election the first time, continued right through to the current moment, I think as early as today, if I'm reading my Truth Social right. So I'm not sure this is going to slow him down. The other thing is that we also have a Supreme Court decision just earlier, a few months ago, in which they said they won't allow federal district court judges to impose nationwide injunctions, which raises the question, is Judge Breyer's ruling just for his district, or does it apply nationwide? So as much as I would like to think this may slow things down so we could get a real decision out of the Supreme Court, I'm not sure it's going to slow down this administration.
Rick, weigh in here. Do you agree with Jeannie on that point? Does this serve as some sort of deterrent when it comes to other cities across the United States? Or at the end of the day, could this simply be just something that happens months after the actual action of putting troops in those cities? How do you view it?
Yeah, Kriti, I think this is exactly what Trump is looking for. He wants to test the legal boundaries of a very powerful presidency, and he's done it in various ways, and this is just one of the most current ways that he has said, sue me. I'm going to deploy these troops. I'm going to stake out an emergency. I'm going to take the powers that the Constitution gives me and exert them. It would not surprise, and then, by the way, take me to the Supreme Court, where he's running a pretty good track record right now. And so I have no doubts that there are voices inside the White House saying, great, this is exactly what we planned. we want to take this all the way to the Supreme Court. If we are given the authority by the Supreme Court to deploy National Guard troops anywhere we want for basically any reason we want, this is what they're looking for. They want that carte blanche, and they want it within the first year of their presidency. So I think we see this playing out exactly the way they wanted it.
Well, Donald Trump on Truth Social, to your point, Jeannie, today, this is just a couple of hours ago, at least 54 people, he writes, were shot in Chicago over the weekend. 8 people were killed. The last 2 weekends were similar. The president writes, Chicago is the worst and most dangerous city in the world. And I'm looking at a list of cities by homicide rate. The first American city that appears on the list is, in fact, New Orleans, and that's at position 28. It is followed by Memphis and a few others here. Before you get that far down the list, Jeannie, it's pretty much all in Mexico or in Central America. The president doesn't actually think Chicago is the most dangerous city in the world, I presume, right?
Not if he is looking at the data, but as we know, he is not fond of looking at data. He is fond of finding data or creating his own reality and talking about it. And he very much believes that Chicago is violent. And we should not underestimate the fact that 54 shootings over a weekend of Labor Day is stunning. It is violent. It needs to be addressed. The problem here is, as this federal judge said, the president doesn't have the power under the Comitatus Act to do this. It is an overreach of his power. He does not have the ability to set up a nationwide police force as it is under his power. And so that is the problem for Donald Trump, which is why I think last week in that long extended cabinet meeting that you sat through, Joe, he said, I want to be invited in. And of course, he's not going to be invited in either by Mayor Johnson or by the governor. But it is very much in keeping, to Rick's point, with what the Republican administration here has been really wanting to do, not just to address crime, which they think is a winning issue for them, but immigration as well.
Jeannie, from a state rights perspective, we know that the mayor of Chicago has been very vocal about just how welcome those troops would be. What more can they do, Chicago and other cities across the country?
Well, they are going to have to read carefully this federal judge's decision. I think, if the president does send troops in uninvited, they will take him to court and follow that. We heard the mayor of Chicago say that his police force would not cooperate with law enforcement. There are other more moderate Democrats and Republicans saying maybe the governor and the mayor should try to work with the president to address crime. But I just don't see that in the offing, in part because of the politics of this thing, because we know that Pritzker, just like Newsom, has designs on the White House himself potentially. And so this does give him a way to make a national forum for him to take his case to Americans beyond Illinois.
Well, Rick, you wonder if the president is going to need to rewrite the sort of baseline foundation, the real motivation for using these troops, not unlike the ruling on tariffs. If he can rewrite the tariff emergency and create another reason to keep the tariffs in place, certainly he can find another reason to put National Guard troops in different cities in America, correct? This is something they've likely gamed out at the White House already, no?
Sure. At a minimum, they have already been saying that they're using the National Guard troops to support the immigration plans, which means that you have federal troops supporting the function of a federal law enforcement officer, which actually gives him better standing, within the legal system. There'll always be a reason for this administration to try to do what they're going to do. They're extremely good at finding cause and effect. And even the president's comments on Truth Social this morning about these 54 shootings. You don't have to be ranked number one. It's always an overgrasp for him. But most people would look at that and go, wow, that's a dangerous place if 54 people were shot at, in Chicago this weekend. And so he does play on the fears of people when they say these things. And of course, then he always takes it a little bit too far. But the reality is, I don't think he is going to suffer the desire to find a reason to do it. He's just going to execute upon the path that he even talked about doing during the campaign. He said he was going to put these troops in these cities. and yet people voted for him. Now, when you look at the polls, you see that there's little support for putting National Guard troops in a law enforcement position in these cities. So I would say the really only thing that can control this is the bad political effect that may take place because of it.
Rick, I'm going to ask you maybe a very obvious question here, but are there any Republican cities that could be on the radar of the Trump administration right now?
Oh, well, there should be. In other words, if you're making the argument that these are dangerous cities, I think 3 of the top 5 are in red states as far as crime goes. And so, but that's not what this is about. This is about politics. It's got nothing to do with crime fighting. Donald Trump isn't going to deploy National Guard troops in these states without a close cooperation with the governor, and probably more likely a border state dealing with border issues like he's done in the past. So, we pretend sometimes to say that these arguments that are made in public policy realms are legitimate. This is politics directing policy, not the other way around.
Yeah, we've heard of a couple that they might be looking at, including the aforementioned Memphis, and the administration has suggested that, yes, it will be looking in those areas. Question from a terminal user here, Jeannie, with regard to Chicago. He writes, we could hate Trump for going to Chicago, but the city's been a mess for decades. What is the counter from local officials?
I think that's a great question. And this is where I mentioned before, you do have some voices on moderates on both the Democratic and Republican side saying, hold on, let's work together. Why doesn't the governor invite the president in? But to be clear that he can't just come in without being invited, and they have to have a plan as to what they're going to do to combat crime, hiring more police officers, better training, all the things that we could do to address these issues. Because to the terminal user's point, Chicago has been violent, as have many cities for a long time. The problem here is that Chicago, if you're really looking at the data, is not nearly the most violent city. And of course, you just mentioned Memphis. The Tennessee governor sent National Guard troops to Washington, D.C. when 2 of his own cities are far more violent than Washington, D.C. Why aren't those troops in his home city? So there's a lot of politicking here, to Rick's point. And I think the danger for the Trump administration politically is that polling-wise, this is, at least at this point, wildly unpopular. The American public, particularly independents, do not want armed troops on the nation's streets. But they do, to the terminal user's point, want to combat crime, and we should all want to do that. So hopefully there's a way they can work together to make this happen.
Great conversation with Jeannie Shanzano and Rick Davis, Bloomberg Politics contributors. Thank you both for the insights. We will keep talking about this, something tells me, in the future. I want to mention a quick breaker here. A headline crossed the terminal a short time ago. We told you it was coming. Joni Ernst reports last week, now made official. The senator from Iowa says she will not seek re-election next year, and she's up with a video post making that formal announcement today. This is Blue.
is 1:40 on Wall Street. I'm Lisa Mateo. Tech stocks leading the losses on this shortened trading week. We'll start with the NASDAQ, down more than 1%. All mega caps are falling, with NVIDIA seeing its longest drop since March. NVIDIA shares down more than 2.5%. Let's hit to the Dow, down about 0.7%. The S&P 500, that's off about 0.9%. In the yield space, we have the 2-year 3.64%. That's up 3 basis points. The yield on the 10-year 4.27%, and that's up about 4 basis points. To commodities, WTI crude up about 2.5%, $65 a barrel. We have COMEX gold at $3,589 an ounce. The Bloomberg Dollar Spot Index, well, that's up about 0.4%. Few companies making news. Nestle turning to the executive who runs its Nespresso coffee empire to lead the company, and this is after it was hit by the second CEO firing in little over a year. American Vogue, well, it's named Chloe Mahl as its new editor, and she's succeeding Anna Wintour. Now, Mahl is the daughter of director Louis Mahl, also actress Candice Bergen. Wintour does remain chief content officer for Condé Nast. And finally, McDonald's bringing back its extra value meals. The deals begin September 8th and include a few limited time items like a Big Mac meal for $8. Meantime, in an interview with CNBC, McDonald's CEO, well, he said the reputation of American brands, it's dimmed, and the company wants to focus on strengthening the brand's identity in local communities. For on-demand news 24 hours a day, you can subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash.
Lisa Mateo, thank you so much, and thank you for being with us here on the Tuesday edition of Balance of Power. I'm Joe Matthew in Washington. This is Bloomberg TV and Radio, alongside Kriti Gupta in for Kaylee Lines the next couple of weeks here in the nation's capital. Kriti just in from London with many questions about the stories that are unfolding here. Someday I'm going to have to ask you about what the conversations have been like in London against the backdrop of all the tariffs. Now we've got another court ruling that has brought us to another inflection point, and the markets are clearly not terribly happy. It's interesting. You hear a ruling like that, you think it would be market positive because markets seem to have an allergy to tariffs.
Yeah.
But it's the uncertainty that seems to be dogging the stocks.
It's the uncertainty, even if it's a penalty, even if it's a tariff, just having a number attached to it is a good thing. But you said, what's the thinking in London? Well, I think the thinking is quite similar to what it is here, which is, what is the thinking in Washington?
Just let us know when you know.
Exactly. And will we know?
Well, there's another thing we don't know a lot about, and that's whether they're going to come up with a funding mechanism for the government after the end of this month. If you ask Chris Murphy of Connecticut, you might wonder. He's suggesting that Donald Trump wants to see a shutdown and was on social media talking about this very thing. You can see it on Bloomberg TV and on YouTube. Trump is rooting for a shutdown, he writes. He knows he has created a huge problem because now any budget deal with Republicans isn't worth the paper it's written on, referring presumably to rescissions, among other things, that have Democrats and Republicans not exactly getting along. Now, we bring all of this up because lawmakers are coming back into town today. It's fly-in day. And we wanted to spend some time with Mick Mulvaney, who's with us in our Washington studio right now. Former Republican congressman, co-founder of the Freedom Caucus, of course, former acting chief of staff in the first Trump administration. He ran OMB and has more titles than you can fit on the card. It's great to have you back in studio with us, sir. Welcome.
Great, welcome. It's nice to see you.
I guess summer's officially over. Now we get to real business.
Is it? Does it go by Labor Day or do we go by the solstice?
I'm not sure how. Well, I think Labor Day in Washington.
Equinox. It's the equinox. Right?
Yeah, right. But that doesn't really matter.
I don't think
September 30 is what matters.
That's the end of the year.
I feel like it's up to me to start challenging the conventional wisdom.
Go ahead.
When this many people say we're going to shut down, doesn't that mean we're not?
Generally, yes, in this town. And I actually did hear for the first time from a well-placed Republican that they really don't want to shut down.
Okay.
And they don't think there's going to be one. But I keep coming back again and again to a couple things. Number one, exactly what Murphy said, which is the environment is really, really nasty right now. What was Chris really saying? Ignore the part about the president doesn't follow the law. That's just politics. But what he's saying is, look, we passed a spending bill on a bipartisan basis because it takes 60 votes, and then you rescinded on partisan lines. So we agreed to spending together as two parties, and then you rescinded that spending on partisan lines without any Democrats. And that does sort of make a Democrat wonder, why would I ever vote for another spending bill again as long as this president is around?
Sure.
And then you look at something I'm a little bit familiar with, which is executive authority goes up during a government shutdown, which is technically a lapse in funding. And the Office of Management and Budget is actually heavily involved in determining who is essential and non-essential, a term we're familiar with now in this town, right?
This is going to get interesting.
Oh, it is. So you can imagine Russ Vogt, who listen, I'm so jealous of Russ. He's having a great time down there.
You're jealous.
Absolutely. I would love to be down there right now. This is fantastic. He sort of gets to sit back and say, okay, Greedy, you're essential. And we like what you're doing in the government. And Joe, you're non-essential. So goodbye. So it's really sort of a way to run the government without Congress's input. So yeah, I think they might want to shut down. But you're right. When everybody in this town says X, it's usually a good idea to vote Y. And right now, everybody's saying a shutdown.
Can you just walk us through the plumbing a little bit of the shutdown?
Maybe, but it usually puts people to sleep.
I mean, no. I'm coming in from London, and the thought in London is, shouldn't tariffs have fixed all the problems when it comes to the budget? Shouldn't the math have come and at least canceled out, maybe not canceled out the entire deficit issues, the entire budget issues, but at least taken some of the pressure off? Is that any?
No, it's not even close. I mean,
but is it progress? Even if it's an ounce of progress, even if it's a drop in the bucket?
Well, yeah, it's more money. But I mean, look, I've heard Trump say the tariffs have brought in $7 trillion. No, it hasn't. What's $115 billion? I think is the number. We spent that much during lunchtime today. So no, I don't think tariffs were never designed. They were never designed to plug a fiscal hole. Okay, it's good money. It's additional money. I get it. You and I have talked, Joe, before in the show about how we both thought inflation would go up. It hasn't. So look, it's hard to argue with the facts, and they've not contributed to inflation, and they have generated more government revenue. Period. End of story. No real debate as of right now. But it was never going to plug the fiscal hole to everybody in Washington would go, oh, it's great. We can start spending a bunch of money now. By the way, they just spend money anyway. They don't care about deficits. So whether or not it was plugged or not doesn't really make any difference. Just goes to show you the British are asking about the wrong things.
Okay, well, let's ask about motivations here.
Yeah.
Because it's really interesting what you just mapped out. If you're at the White House right now, you're saying, make my day, right?
Yeah.
Please shut down the government. We have a plan for that. And I wish you luck reopening the government.
Yeah.
We've had Democrats say, yeah, we might vote for a shutdown, but only if there's an off-ramp. There's no such thing with this White House, is there?
Not if they keep their keep in mind, when we went through the shutdown in late 2018 into 2019, we felt like we were doing a good job of managing the lapse in appropriations.
That was the record.
Which is what a shutdown. It was the longest shutdown ever. And, I think it's fair to say that, when a Republican is in charge of OMB, you can make a shutdown look very different than when a Democrat is in charge of OMB. The case in point, we kept the monuments open on the National Mall. The Obama administration during their shutdown, put up the barriers and said, if you don't like it, call Congress, right? So yeah, we do feel like we're able to manage a lapse in appropriations. The only reason that we didn't keep it closed longer in 2019 was because we didn't have the support of the Republicans in the House and the Senate. We had Paul Ryan and Mitch McConnell beating us up on us every single day saying we have to do something about the shutdown. You're not going to get that out of this Republican leadership. So yeah, I think the more interesting question is, if it does shut down, how does it open? And I don't know the answer to that question.
What would the Trump administration want, though? What's the easiest thing to fix to get that shutdown off the radar?
I don't know if they want one. More rescissions.
Keep it close.
More. I mean, we saw one of the most fascinating things that no one paid attention to was this so-called pocket rescission just a couple days ago. It hasn't been done in a long time. We tried to push it in 2017 and 18 when I was at OMB. We couldn't get the White House counsel to go along with it. They've done it. It's a fascinating tool. Look, I think they want to spend less money, especially in things like USAID. They'd like to shut down those entire programs. Maybe that's what would open it up. But you tell me if a Democrat's going to vote to reopen a shutdown government as part of a deal to shut down a bunch of USAID programs permanently.
So the next rescissions package, or I guess the pocket rescission, that's a sure thing, right? If we're daring you to shut down, then let's keep clawing back what we can is the mentality of the White House.
So the logic is actually quite interesting. You want to talk about getting into the plumbing. An ordinary rescissions package, and I've got half a dozen of them, they got nowhere because what happens is they go to the Hill, and if Congress does nothing, they die. All right? Now, this time, Russ Vogt sent one down a couple weeks back, maybe a couple months now, about $9.4 billion, and Congress did act and gave it the thumbs up, and that rescission actually kicked in. This pocket rescission is different. They've got some legal opinions that say, look, if we send you a rescission during the last 45 days of the congressional year, of the fiscal year, If you do nothing, Congress, the rescission is valid. So Congress would have to affirmatively act to undo the rescission. So it sort of flips it on its head when it comes to the last 45 days. It's similar in that fashion to, say, a pocket veto. If this holds, it's a tremendous tool, because what it means is that future administrations in the last 45 days of their administration can really claw back on spending unless Congress does something. And as we all know in this town, Congress is better at doing nothing than it is at doing something.
Is there a political cost to a government shutdown?
Never.
What does that look like?
Hardly ever. Everybody says it costs people votes, and I don't know of a single person who ever changes a vote based on maybe pollsters have got hard data. I don't remember. I've been through, I don't know, Joe, how long have we been here? 6 shutdowns since 2015? I can't remember.
Is that how we're measuring time now?
And I cannot remember a single time.
And Wall Street feels the same way, doesn't it? Because when you reopen the government, presumably someday, everything goes right back. Everyone's made whole.
Keep in mind, I
on what they
think
missed.
The best GDP quarter that the Obama administration ever had was the quarter that we had a big shutdown.
Wow. So here we go.
Yeah.
Another
Buckle up.
rescissions package, another shutdown. Bring us
Again,
inside the room.
I want to be Russ Vought when I grow up.
Bring us inside the room. We could connect you guys.
Yeah.
For the conversation with Donald Trump on a day like this, when the court says, nope, tariffs are illegal.
Yeah.
And then says, actually, some of these other things that you're doing, sending National Guard into L.A. was also illegal. Does the president sit back and say, okay, then, Mick, rewrite it so it's not illegal? Or does he take this as a defeat?
No, he never takes it as a defeat. He does. I thought you were going to say, does he say, let's challenge it at the next level?
Okay.
Because the answer to that question is both.
So yes to both.
He goes to one group and says, all right, so what's our argument at the appellate level, the next appellate level? I think the tariffs just came out of the federal court here in D.C., right? So that'll go to the Supreme Court. Get ready on that. But in case we lose, what's our backup plan? So let's go back and find out our 232s. What other tools have we got? This is one we're not familiar with, like a 122, which is a 15% for 150 days or something like that. There's all sorts of trade tools the president has, in addition to the ones under IEPA that just got shot down. So you can do both. We're going to continue to push on the court decisions all the way up to the Supreme Court. And at the same time, if we lose, we're going to start the process to see what we can do that can pass judicial muster.
Well, in terms of getting some of that other alternative sources of revenue, we've already talked about in the past couple of weeks this idea of getting, say, 15% of revenue from corporations as one example. How serious is he about expanding that use?
Sadly, I think he's serious about it. This whole government ownership of private companies, I think, is real. Really, really disappoints me. I'm not a big fan. You look up the definition of socialism in the dictionary, and it says, includes government ownership of the means of production. And last time I checked, we now own the means of producing some chips. Right. So I'm not excited about it. I hope that there's somebody in the White House trying to make the president for the case that why this has always been a bad idea. It never works. But I'm not sure that those voices are really ascendant.
So who's telling him in the White House that this is a good idea? Would this have happened in the first administration? When you were criticizing Barack Obama for investing in government motors?
Yeah, and maybe we were just too close to it back then. Maybe there's a period of time and now people have forgotten that socialism is a bad thing. I have no idea. Do I think Peter Navarro is capable of making an argument that, the government should own U.S. Steel, the government should own GM, the government should own Intel? Yeah, he probably is. But, I mean, face it, you can't, as much as I beat up on Peter, and I'd be happy to do it all day long if you want me to, he can't be the only voice. There's got to be other voices in there saying, Mr. President, I think that's a really good idea.
Even Howard Lutnick suggested Lockheed Martin might be a target.
This is just
private sector,
why not?
Man.
Hey, why not? If we own, let's see, we own critical minerals now. Yeah. We own a piece of U.S. Steel. We own a piece of Intel. Why not? Why don't we own Boeing? Once you open this door, how do you close it? And that's my question to my Republican friends. Where's my camera? Over here. So when we finally lose control, and the Democrats are in charge, which always happens in this country, pendulums swing back and forth, and they want to go out and buy every solar energy. We thought lending money to Solyndra was a really bad idea. Ooh. How is it going to be when we own Solyndra? I mean, that's where we are going. Now we're arguing about not just even different levels of socialism. It's what are we going to buy? If you're a Republican, you want to buy Lockheed Martin and Intel. If you're a Democrat, you want to buy Solyndra and whatever. I mean, this is who's the better socialist, not the difference. There's not much difference between the two parties at that level. That's why I'm so disappointed about it.
This has happened to me more often, Creedy, when people in the studio are looking directly to the camera to send a message directly to someone.
Yes,
and I'm wondering if is the president watching this thing now? Because
yes, he's out there someplace in television land watching me.
He's been responding from time to time, which is why I asked. But
my brother or the president?
The president, yeah.
My brother responds to me, President.
Oh, your brother. I thought you said your mother. All right, we'll keep it all in the family here, I guess, with Mick Mulvaney. Great to have you back.
He's a huge Bloomberg guy. Huge Bloomberg guy.
Well, I love that. Thank you for being
By the way,
along.
do you
all the
know,
Mulvaneys.
Do you know that David Schweikert has a terminal in his office? He watches you guys every single day.
He's got a terminal.
Yeah.
Did you know that, producer James?
Yeah.
This is wow. How many members have terminals?
I think he may be the only one. I hope I didn't give him. I hope I didn't get him in trouble.
We buried the lead today.
Yeah.
This is good news. This is good
You guys
stuff.
have a direct line into the halls of power.
The former congressman and former acting chief of staff at the White House. Thank you for the insights as always, and don't be a stranger. With me here in Washington, Creedy Gupta will meet you for the late edition of Balance of Power, if you're ready to roll.
We're ready to roll.
Delighted to have you as part of the conversation. And by the way, that's at 5 p.m. Eastern Time. That'll be after the president's announcement. So we'll have a lot more to talk about right here on Balance of Power on Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, across Bloomberg platforms, Carol Massar, Tim Stenivek, live here at Bloomberg headquarters in New York City. It is, well, welcome back. Hi, I'm back.
Welcome back to you, Carol Massar.
I have to say, it's so good to step away. We followed the headlines. Lots going on the last 2 weeks, I know.
Hold on. I was here, okay? We followed the headlines.
I did too from my phone.
I was here doing the headlines, okay?
You were. It was so busy. It was kind of crazy.
We missed you. We are glad you're back.
I'm glad to be back. I love you, Tim. I love our team. So I'm kind of getting ready for what's to come in September because, man, it is a crazy, crazy month. It's usually, at least it has been the last 3 decades, the toughest one for stock returns. So we're going to talk about the markets, the setup in September. And what else? We got a lot going on.
Yeah, jobs report is coming this week. A Fed decision in nearly 2 weeks. Countdown to a possible October 1st government shutdown. Fortunately, Michael McKee is with us. He's going to help break down all of these things. And maybe he'll give us some advice for winning that next Powerball jackpot.
1.3 billion. No winner last night.
Okay.
Get your numbers ready.
I guess it was you. You're here. Mike's here. Lisa Mateo's here, which means that
I wouldn't be here.
None of you guys won. Is that what it is?
You would come in. I would come in.
Oh, if I won?
Yeah.
Well, I'd come in because you have to turn in your badge.
Calls it like it is. All right, we're going to get to Mike in just a moment. Hey, we're going to talk about U.S. trading partners dazed and confused after tariff court losses, a story that was all over the Bloomberg over the weekend. We got to dig into that one, Tim.
Yeah, plus President Trump's fight with the Fed's Lisa Cook and the ties that bind. We're going to look at China, Russia, India, and the axis of power, Carol.
And we got a mega deal undone and pressure on PepsiCo. Lots coming your way in the next 60 minutes. Let's get to it with Lisa Mateo. She is in for Charlie Pellet. Hey, Lisa.
You got it. Thanks, Tim and Carol. Wall Street returned after the long holiday weekend, kind of on a down note. The weak traders looking ahead to key labor market data with the jobs report on Friday. So let's start with the NASDAQ. It's down about 1%, 250 points. We have the Dow off about 0.6%. The S&P 500 off about 0.9%. In the yield space, we have the 2-year 3.65%, and that's down about 3 basis points. The yield on the 10-year 4.28%, and that's down about up about 5 basis points. To commodities, gold hit a record. Let's check out COMEX gold right now at $3,593 an ounce. We go to WTI crude, $65 a barrel. The Bloomberg Dollar Spot Index right now it's up about 0.5%. Few companies making news. We'll start with Anthropic. It has closed a deal to raise $13 billion from investors. It's a new funding round that nearly triples its valuation to $183 billion. And Kraft Heinz, that's its plans to split into 2 publicly traded companies. One will include, yes, the Heinz ketchup, other condiments, boxed meals. And the second company, that'll include that slower growing grocery products like Lunchables. Kraft Heinz shares down about 7%. Activist investor Elliott Investment Management, it has built a $4 billion stake in PepsiCo. Now that move actually makes Elliott one of PepsiCo's largest investors. PepsiCo shares, they are up about 1.5%. And finally, the U.S. pulling Taiwan semiconductor manufacturing waiver to freely ship those essential gear to its main Chinese chip-making base. Checking in with ADRs, they are down about 0.4%. For on-demand news 24 hours a day, you can subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo, and that is a Bloomberg Business Flash.
Hey, thanks for that update, Lisa. Redhead crossing the Bloomberg terminal. Rachel Metz of our Bloomberg News team reporting that OpenAI has agreed to buy the product testing startup Statsig for $1.1 billion. It's an all-stock deal, the company said, marking one of the largest acquisitions in the ChatGPT maker's history. OpenAI was a client of Statsig, or is a client, including Milwaukee is a client, Riot Games is a client, Electronic Arts is a client, Microsoft is a client. And I'm looking on the website, Carol, Bloomberg is a client as well.
All right, so good to know, right? Stuff certainly continuing in the AI space. All right, we're going to be focusing on that, but really our focus for today, we're thinking about September and all that is coming at global investors, including some news that broke late Friday. A federal appeals court ruled then that President Trump's global tariffs were issued illegally under an emergency law upholding a May ruling by the Court of International Trade. That late Friday action
really extending the chaos in global trade. We want to know how strong an action this is legally. Could it lead to an undoing of all the tariff actions by the Trump White House? What does it mean potentially for everybody who's watching, investors and also the Fed that's watching and that makes a decision in just about 2 weeks from now? We also wanted to get the latest on Lisa Cook and that legal fight that she is having with President Trump. So let's get to it. Eric Larson in the house, Bloomberg News U.S. legal reporter, and also Bloomberg TV and Radio International economics and policy correspondent Michael McKee, both here in studio. Eric, let's start with you. The ruling on President Trump's global tariffs. Explain the case, the ruling, the significance. Is this a big deal?
Yeah, it was definitely a big deal. We weren't necessarily expecting it Friday night, but it came in, as you said, it upheld the ruling from May of the U.S. Trade Court finding that Trump had issued those tariffs illegally, those Liberation Day tariffs, because they were issued under an emergency law that had never been used in that manner before. The majority of the appeals court just said flat out that's not why Congress passed that particular law. Therefore, all these tariffs are illegal. But in a bit of a twist, they said we're going to go ahead and delay or stay this ruling until it goes to the Supreme Court potentially. So right now the tariffs remain in effect, but once again, judges have held that they were issued illegally.
So, Mike McKee, come on in here. You haven't gotten any calls for refunds yet on tariffs that you've paid?
It's an interesting question of how that would be done, because we've never had this situation
before. It is a serious question, though. I mean, this is something that's been written about,
It's a serious question. One would presume that if they were forced to refund all of the tariffs that had been collected, they would probably essentially go back to the importers of record that paid it. But of course, the administration's been arguing that most of this is being paid by overseas countries. And also, we all know that we've been paying it. Now, how much have you paid in extra cost for tariffs that you should get your money back on? So that's going to be something that I'm sure will be fought about in the courts as well. And then they have to set up a system, presuming Trump moves on to the other tariff possibilities that he has, to collect those tariffs, and I'm sure there will be lawsuits filed on those. So this is a long way from being done.
Well, that's what I want to understand, Eric. Like, what is the next legal action, and how likely is it in an environment where the unthinkable continues to happen? You know, the logical doesn't necessarily happen. So walk us through that.
Sure. We can expect that Trump at some point will ask the Supreme Court to take the case. We can expect they probably will agree to do so. But both sides are going to come to the court and say that they're going to suffer more harm from this illegal act. And you can expect that the administration would say, look, these tariffs are already in place. How could you undo them now? We're already collecting billions of dollars on them.
Right.
We're in the middle of trade deals. So they're kind of saying it's too late. We have to move forward with these tariffs because it's already done. Of course, plaintiffs in this case, a group of Democratic-led states and small businesses are going to say, well, sorry, you should have known that going into it. In fact, you knew that they were illegal back in May when the trade court said so. And so you've created a mess, and therefore you're just going to have to get out of it, probably with these refunds, as we discussed.
But with this Supreme Court, just one more on the legal, I mean, should we assume that this is a Supreme Court that seems heavily stacked in President Trump's favor? So should we assume?
Well, we never want to just assume that because he has a 6-3 conservative majority that has ruled consistently in his favor, even in times when a lot of legal experts would have expected them not to, based on precedent and the Constitution. Sure, it could go either way. So
Tim's laughing.
It's been interesting because I've been seeing legal analysts and scholars write this weekend that this should be a slam dunk case against the Trump administration because there's nothing in the Constitution that gives him tariff power, and there's also the non-delegation clause from Congress, and it seems to law professors that it's very weird that the court could do the opposite, but nobody thinks that's impossible.
But, Mike, isn't there a backup plan that the Trump administration has, at least when it comes to implementing tariffs of a certain sort? They could use a different emergency measure?
There are a number of different tariff authorities that he can use, some of which he's already using to put on the tariffs on steel and aluminum and autos. There are tariffs he can put on for national security purposes, although there has to be a finding that there's a national security need.
And there's a certain expiration date on some of these, right?
Well, the one that people are pointing to is a section of the tariff law that allows him to put on tariffs if there's a situation where the United States is suffering from unfair trade that lasts for 150 days, and they can put 15% tariffs on. And so that could be a bridge to whatever they end up doing. But a lot of that's the universal one. And a lot of these others would have to be done country by country, which would take up some time, A, to get the reports done, and then B, to figure out how to implement them and what level of tariff you're going to put on.
Before we wrap up, I just want to spend a minute on Lisa Cook. Eric, what's next in that legal battle that you think we should have on our radar? This is, of course, the Fed governor that President Trump has fired, and Lisa Cook has filed a lawsuit against the president.
Right. So essentially, there was a hearing on Friday morning. There was no ruling, but what we're waiting for is a ruling on whether or not she can stay in her job while this case proceeds. So either a temporary restraining order that would keep her in her job for a few weeks or a little more, or a longer-lasting preliminary injunction that would last for the rest of the case. And right now, we don't even know exactly which type of ruling the judge will issue. There might be negotiations behind the scenes that will prevent the need for an emergency TRO. So we're going to get another filing from Cook today, this afternoon, potentially. We might get another response from Trump's side, and then it could be days before we get a ruling.
This just into the Eyewitness News Network. While you were talking, I got an email from your editor.
Yeah, the September 4th.
The filing from the Cook side, the Lowell filing, is in, and apparently the lawyers for Cook want permission to file a longer brief, and so they have asked for Friday or actually Thursday, September 4th. And so and the government does not oppose that. So no ruling before September 4th. The question is, though, as Eric left it, is until such time, is she employed or is she not? We don't seem to know.
We don't know. And it's possible that they might tell the judge they've come to some agreement about her being able to stay in her job until there's a ruling, but we don't know yet on that.
Okay, just when we thought, we crossed some things off our uncertainty list.
It's always something.
Adding another one. You guys rocked. Eric Larson, Bloomberg News U.S. legal reporter, and Bloomberg TV and Radio International economics and policy correspondent Michael McKee. Just some of the issues, Tim, coming at investors this month.
Yeah, we're going to stay on that and how that may be, should be, could be impacting those, and how investors sum up the environment and make decisions or put off those decisions, Carol. He's the author of The Confidence Map, Charting a Path from Chaos to Clarity, a book that digs deep when it comes to decision making.
So delighted to have back with us a friend of the program, Peter Atwater, president of Financial Insights and adjunct lecturer of economics at the College of William and Mary, joining us from just outside Philadelphia. Peter, great to have you back on the first trading day of September. A lot coming at us. Summer's over, September's here. We always feel a kind of a mood shift. Any reason to think that this month will also potentially be problematic for investors? Is it maybe a different September this time around?
Carol, thanks for letting me be here today. Yes, I do think it's going to be a very challenging September. Several things on my radar screen. I'm watching European sovereign yields. And already today we've seen a clear linkage between higher yields and lower equity markets. And if that narrative continues, that could be quite a moment for the stock market, because politically, France, Germany, England is a real melting pot today of populism. So that's very much front and center in my mind.
How bad or how problematic might it get then for investors? Like, how do you see it potentially playing out? And do you also anticipate, we mentioned your book, The Confidence Map, going into this, and we do think about what's on top of mind for investors right now when it comes to making decisions, whether or not to deploy assets, to pull back, like what to do in this environment once again. And then we just talked about the trade, ruling on trade, whether or not all of that we've been living the last, 5 or 6 months, comes undone.
Yeah, when I look at the population today, particularly on the investment side, there is a sense of invulnerability like I've not seen. Certainly makes what we saw in 2021 look timid. Investors, particularly retail investors, believe this market is unsinkable. I saw somebody analogize it to Rasputin. This is an unkillable market. Both of those really trouble me because they suggest that investors think that they can continue to ignore the geopolitics around them. And I don't think that will ultimately prove to be the case. At the same time, though, I see despondence, particularly among the low-end consumer. And I used to talk about the arms and legs of the K-shaped economy. Now I have to talk about fingers and toes because the clustering has become so extreme at the very top and at the very bottom. And that gap now appears to be uncrossable. And as we see over and over in history, shared powerlessness is something that unites those at the bottom. And so I think policymakers on both sides of the aisle need to be attuned to that.
Hey, Peter, we're getting some headlines from President Trump right now. He's speaking on the Scott Jennings radio show. He says he's going to appeal the tariff ruling. He said that he repeats that global tariffs are an economic emergency. And he said we'll see a reverberation if we don't win on tariffs. How in your view, should investors be thinking about this? Because, you talk a lot about chaos and clarity. And I think there's more chaos than clarity. I think it's fair to say right now when it comes to at least the policy as a result of legal battles, as a result of, the back and forth with these lawyers, with these rulings, it's not necessarily clear what is happening.
No, it's not clear, but this is a continuation of very me here now decision making that we see on the part of the new administration. And I think that for investors, they've presumed that when markets decline, the administration will step back and pivot in their favor, the taco trade. And I think what's becoming reality is that those who are running businesses, and we saw this in the manufacturing reports earlier today, that they're really struggling with the uncertainty and powerlessness that they feel. And the result is, in those situations, as you would expect, they're pulling back on orders, they're making more deliberate employment decisions. And so the real economy, I think, is decoupling from the markets, and the markets believe that they ultimately prevail. And I think the real economy is about to show them that's not the case.
What's your take on the president in terms of watching the financial markets and his willingness or unwillingness to back off of policies that upset things? Because we did see kind of a 180 when it came to tariffs way back when or earlier this year. But how do you see that now, or how do you factor that in now, Peter?
What I see since then is a growing sense of invulnerability. And I see that politically, financially, economically, that the administration sees itself and sees its decision-making as just irrepressible, that unopposable. And those suggest to me a level of insularity, isolationist, that is increasingly decoupled from what we're seeing on Main Street. It's very interesting to me that we haven't seen the president out doing rallies in this new administration the way he did before. And instead, he's very isolated in the White House and Mar-a-Lago and places where...
Why do you think that is? Because the energy of the rallies was something that a year ago we talked a lot about, and even up to the election. And we know he likes to even go on tour to celebrate what he views as wins. Why do you think he's been quiet about this?
My own view would be that he doesn't see it as necessary at this point. He's won. And so there is a sense that, that support is no longer needed for him to be effective in his role. And I think that's a challenge, will become a challenge, because it's one thing to unify a crowd against a common enemy, in this case, former President Biden. The challenge is then maintaining that momentum and cohesion post-victory. And so it surprises me too, Tim, that we haven't seen him out there trying to sustain the crowd.
So, Peter, in our next segment, we're going to talk a lot about what seems to be kind of the new axis of power, China, India, Russia. And I do wonder, as we talk about the U.S. seemingly or accurately or actually turning more inward and the rest of the world kind of moving on in new alliances, what does that mean for the U.S. financial markets? What does that mean for U.S. investors?
I think you're seeing not only the United States turn inward, but Europe turn inward.
Right.
It too is pulling back, and not only globally, but among itself. And so it's very interesting to me that we have a Western world that is increasingly isolationist at a time that the Eastern world appears to be coming together. Now, having said that, we're talking about three very dominant, independent, nationalist leaders who today it is very convenient for them to create what looks to be cohesion against the West. But I wouldn't underestimate that if confidence drops in those geographies, they too will become very inwardly focused.
We're talking with Peter Atwater, President Financial Insights, Adjunct Lecturer of Economics at the College of William and Mary, and of course, the author of The Confidence Map. Do you not buy the images, what we're seeing in all the footage, the handshaking, the laughing between President Putin, President Xi Jinping, and of course, Prime Minister Modi? Do you not buy it? Is it just for the cameras?
No, I do buy it. I buy it particularly symbolically that it behooves them to demonstrate that they are cohesive against the new administration. But it's one of those cases where, my enemy's enemy is my friend, and that is only effective so long as the three of them continue to see the Trump administration as their joint adversary.
Peter, before we let you go, just an update from you about a question that we first discussed back in March when you were on the program, when we asked if you believe the U.S. would be uninvestable. This was pre so-called Liberation Day. I'm curious if you think the U.S. is more or less uninvestable at this point now than it was back in the spring.
No pressure, but that response kind of went a little viral. I'm just going to tell you that.
Yeah, so I do believe that it is more uninvestable today than it was before in March. And my reason has to do with the substantial diminution of shareholder primacy that we've seen. The new administration has been very aggressive in pursuing nationalist economic policies. And I think that makes the United States, particularly at these valuations, far less attractive than it had been.
All right, we need to run. Peter, as always, thank you so much. Be well. Peter Atwater, President Financial Insights, Adjunct Lecturer of Economics over at the College of William and Mary. And as we mentioned, his book, something we've talked about on air with him, The Confidence Map, Charting a Path from Chaos to Clarity.
Let's get an update on the trade. We're still in the red, but for an eye on everything that's happening, here's Lisa Mateo in for Charlie Pellet. Hey, Lisa.
You got it. We are still in the red. Wall Street kicking off September trading lower. We have the NASDAQ down more than 1%. Same for the S&P 500 and the Dow down about 0.8%. Heading over to the 2-year yield, 3.65%, and that's up about 3 basis points. The yield on the 10-year, 4.28%, and that's up about 5 basis points. The Bloomberg Dollar Spot Index up about 0.5%. On the economic calendar for today,
today. Well, U.S. factory activity, that shrank in August to about 48.7 for a sixth straight month, and that was driven by a pullback in production. Now, the ISM's manufacturing index, it saw a slight improvement from 48 in July. In other news, OpenAI, it's agreed to buy product testing startup Statsig for $1.1 billion. It's an all-stock deal. It's one of the largest acquisitions, actually, in the ChatGPT maker's history. Then Jane Street Group, they pulled in a record $10.1 billion. Its net trading revenue in the second quarter, beating out all of Wall Street's biggest banks. Well, it looks like consumers continue to spend on jewelry. Signet Jewelers, that's the owner of Zales and Jared. Well, they raised their full-year sales guidance. Their shares are up more than 2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is a Bloomberg Business Flash.
All right, so appreciate it. Lisa Mateo there, in for Charlie Pellet. I'm Carol Master, along with Tim Stanovic, live here on Bloomberg Business Week Daily. Okay, so we say this a lot, but we're definitely living in some very interesting times. Take what happened yesterday. Cameras capturing Chinese President Xi Jinping in a rare, unscripted huddle with Russian President Vladimir Putin and Indian Prime Minister Narendra Modi. Timmy.
Yeah, the point, President Xi's most powerful partners in resisting America on the world stage happened at a summit in the Chinese port city of Tianjin. At one point, President Xi held the hand of his Indian counterpart as the three men laughed casually. It was a striking scene given just months earlier, New Delhi and Beijing were seen as rivals. Here's Leland Miller, co-founder and CEO of China Beige Book, taking note of the deepening relationship between India and China earlier on Bloomberg Surveillance.
If you look what's happening with India right now, India doesn't want to be looking around the room and see China on the left and Pakistan on the right and Belarus across the room. I mean, it would rather be in a group of countries, the United States and others, and strengthening trade relations there. But it will push back if it thinks it's being pushed into a corner. And so we're seeing a situation where China is becoming an attractive option because it's not the United States right now.
All right, that is Leland Miller, co-founder and CEO of China Beige Book, earlier on Bloomberg Surveillance on Bloomberg Television. Let's get to it and explain or get a little bit more detail on how she sees what the cameras captured at the meeting of leaders of China, India, and Russia, and what's really going on behind the scenes. Back with us is Wendy Cutler. She's VP, Vice President of Asia Society Policy Institute. She joins us from the nation's capital. Wendy, good to have you back on with Tim and myself. So let's go there. You spent 3 decades as a diplomat, negotiator in the Office of the U.S. Trade Representative. The significance of what was captured on cameras of those 3 leaders. Let's start there, and then what you think might be going on behind the scenes.
Quite a big, important week on the other side of the world, where 3 of the most powerful leaders in the world really showed an affection and agreed on an agenda going forward. And frankly, for me, seeing Modi as one of those 3 leaders comes as a surprise, given where we were just 3 months ago with India, where we were on the verge of concluding one of the earliest trade agreements with Delhi. And so, boy, things have changed quickly. I'm not saying that Modi is all in with Xi Jinping and Putin, but he sure looked comfortable this past weekend with his fellow leaders.
Is there a way, in your view, for the U.S. to bring India closer or back to the point where it was, as you say, 3 months ago? Obviously, last week with those 50% tariffs that went into effect was a big deal between the relationship between these 2 countries. But is there a way to go back to what it was?
I think it's going to be really hard to get back to where we were 3 months ago, but I do think that we can move in that direction. And the best step forward would be to find a way to agree on a trade agreement with India. We got very close. There were very few issues left, including, the extent we could open up India's dairy market. And given the importance of this geostrategic relationship, I would hope that we could find a way forward on the trade front, allow for the relaxation of the tariffs, and move in the direction of getting this relationship back on track. But I think some permanent damage has been done, no doubt about it.
Well, that's, Wendy, when I see these pictures, I mean, these are very important leaders. And, it's not mean girls and they're like, don't like a girl. And, they're just like, let's get together to like tick somebody off. I mean, these are
leaders of very important countries, geopolitically, economically. What they do matters. So it's not just something you do casually, right? So as you say, this is pretty significant, and this is going to have a lasting impact beyond President Trump being in the White House.
Absolutely. It took us 20 years through a number of administrations to warm relations with India to the point we were 3 months ago. And it's always easier to build, to destroy relationships or to hurt them versus to build them. So this is a big setback. That said, I think we should also keep in mind that India and China, there's a lot going on between those two countries. And while relations may warm up, they have some serious challenges that have plagued their relationship, including a border dispute, including a large and growing Indian trade deficit with China, and the fact that China is flooding India, like other countries in the region, with a lot of exports that are displacing its local production. So again, I think we just need to kind of keep this all in mind as we sign off the United States and say China and India are best friends. I think each of those leaders knew what they were doing. They wanted to show the world that, they're a group and they're working together, but they're also very skilled politicians. And I think there was a reason why each of them wanted to send that message to Washington in particular this weekend.
On China and Russia specifically, we're getting comments from President Trump right now. The Scott Jennings show is playing a recording of an interview that was done by the president recently. The president says, quote, he says, quote, they'd never use their military on us, talking about Russia and China, and he's not concerned about China and Russian ties. Should the president be concerned about China and Russian ties?
Yeah, I think every president, every administration should be concerned. That said, these ties have been strong for many years, and Xi Jinping and Putin have met over close to 50 times since both of them have been in office. So those ties are going to continue to be close. But to say we don't care or that's not a big deal, I don't really agree with that. I also think that for this administration, they're looking to improve their relations not only with Russia, but with China as well. And so in some ways, it's in their interest not to look like they're working against those two countries working together, but more trying to be more nonchalant about it.
Wendy, something I want to ask you, and also the president speaking, as Tim mentioned on Scott Jennings' radio show, another headline is the president repeating that the global tariff situation or global tariff is an economic emergency. There are some that would argue that the U.S. needed to step up its efforts to protect its markets. And it wasn't just a Republican thing, it was a Democratic thing as well. If you think about the pushback specifically against China, the pandemic revealed how much of our supply chains were overseen by China. So what the president is doing and his team are doing does make sense to you. What doesn't?
Well, here's the deal. There are a whole number of trade laws that the president could use to pursue our trade agenda against China. He used Section 301 of our trade law during Trump 1.0. No one challenged his legal authority to use that statute. So this is coming down to his use of a statute, IEEPA, which basically is premised upon a national emergency and then gives the president unlimited power. And that's where the courts are pushing back. But from my point of view, there are other statutes that frankly could be used and are more fit for purpose than IEEPA in the current situation.
Hey, well, one of the things I do want to ask you, since we just did a big conversation and deep dive into that ruling we got, was it Friday night, where President Trump's, the federal appeals court did rule that President Trump's global tariffs were issued illegally under an emergency law, so upholding that May ruling by the Court of International Trade. It sounds like there's going to be some back and forth before we finally get a resolution. But how do you think that might ultimately end up? Will they be overturned or not likely? I don't know. Do you have a good thought on that?
I don't. And anyone who says they do, I don't believe them. I think we'll probably end up going to the Supreme Court, and none of us can predict what could happen. But the point I would make that even if the president loses and the Supreme Court votes against him, again, there are other trade laws that he can use to advance his trade agenda. So yes, it would be a setback. But I don't think it would mean that, he's going to give up on tariffs. I think we're living in a tariff world under Donald Trump for the next 3.5 years, whether we like it or not.
Do you think that it will just be for the next 3.5 years, and the next president, even if it's a Democrat, would actually remove these tariffs? Because this is a significant source of revenue for a government that likes to spend money, whether you're a Republican or a Democrat. That's what we've seen take place in the White House, and one that has now, thanks to the new tax bill, has lost some serious sources of revenue.
And the other point I would add is that Biden kept many of the Trump tariffs in place as well. So I think you make an excellent point. That said, the next president may have, a different agenda in putting a lot of emphasis on trying to work more closely with our allies and partners. One of the first things they're going to ask for is a relaxation of tariffs. So I'm not sure that all of the tariffs would remain in place as is, or there could be, other options and other agreements reached, or other steps taken which could allay some of these concerns.
Yeah. But it makes it tricky then for investors or just the world at large, or CEOs to make decisions when it could switch again in 3-4 years or so on. Hey, Wendy, thank you so much. Wendy Cutler, VP of Asia Society Policy Institute, joining us from the nation's capital. When we come back, action in the consumer packaged goods space, a mega deal undone, and then some pressure on Pepsi. That's next.
It is 2:40 on Wall Street. I'm Lisa Mateo. Markets watching the next steps from the Trump administration after most of the president's global tariffs were ruled illegal by a federal appeals court late last week. Let's get right to it. We'll start with the NASDAQ. It's down more than 1%, 280 points. We have the Dow off about 0.9%, 427 points. And the S&P 500 off about 1%, 73 points. Over to the yield space, the 2-year, 3.65%. That's up about 4 basis points. The yield on the 10-year, 4.27%. And that's up about 4 basis points. To commodities, we'll check in with WTI crude up about 2% at $65 a barrel. We have spot gold at $3,530 an ounce. To currency, the Bloomberg Dollar Spot Index, that's up about 0.5%. Shares of Target, they are down nearly 4%. That's the most since mid-August. And the reason why, well, the American Federation of Teachers, they endorsed a boycott against the retailer's decision to end some diversity programs. Then we have shares of low-cost airline Frontier. They are flying high, up about 13%. Deutsche Bank, they listed the recommendation on the carrier to buy from hold, saying that it's best positioned to benefit from Spirit's bankruptcy. And Sumitomo, a lead group, will going to buy aviation finance firm Air Lease for $7.4 billion in cash. We check in with shares of Air Lease. They are up about 6%. And Elon Musk predicting Tesla will derive about 80% of its value from humanoid robot Optimus. Now, this initiative he first talked about 4 years ago. Meanwhile, deliveries from Tesla's Shanghai factory, they extended their slump in August, and the company's long-awaited entry into India, that's delivered underwhelming results so far. Apollo Global Management set to launch a $5 billion strategy to invest in sports deals, marking another major asset manager targeting that booming sector. For on-demand news 24 hours a day, you can subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is your Bloomberg Business Flash.
I don't know about you, Lisa, but I am so into a humanoid robot. Like, bring it on, do my laundry, do the dishwasher.
Yeah,
right? Like, totally. Like, I'm just so into that.
until it
what takes
turns
over?
Against you.
Locks you in? Like, I don't know.
Until it turns into the boss. Then what happens?
I don't know.
It's all fun and games.
It's all fun and games until it turns against you.
Yeah.
What's that movie that was on one of the streaming? It's I can't think of it. It's the daughter of Brian Williams, Allison Williams, and she brought home like it was like a robot. Come on.
I don't know
You're
what it is.
You're the cool one who watches all the good streaming stuff.
False. I am finally catching up on Black Mirror, though, which is a good thing to watch.
I am not. That just seems so creepy.
It is, but if you think about it, I mean, I was thinking about it, like an episode from like 10 or 12 years ago literally is our life right now with the AI chatbots and, things being able to be programmed in the,
you just
by
want to talk
analyzing.
South Park, don't you?
No.
Come on.
It is having a season
that
is bringing back viewers.
It's pretty,
which is pretty remarkable.
They're being very topical.
Yeah.
Kind of like SNL, like when it's
and they're taking 2 weeks in between episodes to really
deal with the news
and bring you those current events.
I think it's pretty cool stuff. Anyway, I think it's kind of interesting.
Carol Masser, big South Park fan.
Well, I'm behind the times, but I'm like catching some clips online, and it's pretty funny. And whether you like it or not, it's just, I don't know. Humor is a part of culture. It's okay.
Hey, did you see what's going on with Kraft Heinz?
Well, I read in this morning.
Yeah, shares are lower today by about 7.5%. The company's planning to split into two separate companies, one selling Heinz ketchup, the other iconic condiments, the other including slower growing grocery products. Warren Buffett coming out and saying he's disappointed in the planned split of the company, though he concedes the merger he orchestrated a decade ago was not a brilliant idea.
Yeah, I think it's very interesting. I mean, it was kind of iconic when they came together. He did speak with Becky Quick over at CNBC and about this specifically. I will say what's interesting, too, and our write-up on this, we remind everybody that the Kraft Heinz bet marks a rare misstep for Warren Buffett. In recent years, the maker of Heinz ketchup and Kraft mac and cheese has been grappling with inflation and a major shift in consumer preferences away from packaged foods. I mean, think about how you eat, how I eat, how many people eat. It's not like it was maybe 30 years ago, 25 years ago, even 10 years ago.
No, it's changed a lot, and what consumers want has changed. But it also comes at a time where you're seeing companies that for really a better part of the last decade thought that bigger was better and together is stronger. So, you look at what happened last week with Keurig Dr. Pepper,
right,
or even just in the last couple of years with the breakup of GE and the way that some of these companies have been able to kind of hit the ground running, at least for shareholders. So I know this stuff is very cyclical, and what moves one way or another way might not always happen, but we're in an era right now where companies are deciding, okay, well, 1 + 1 is 3.
Right. And the news or the trends or the numbers don't lie in terms of what people are buying or not buying. So let's talk a little bit more about it. As we mentioned, Kraft Heinz, we've seen that stock down as much as 7% today. We also have some news on PepsiCo, Elliott Investment Management building a stake of about $4 billion in that company. And we do see PepsiCo rallying roughly 6% at its highs today. So with us is Ken Shea, part of our Bloomberg Intelligence team. He's senior analyst for consumer products. He's out there in our BI headquarters in Princeton, New Jersey. All right, Ken, we just talked a lot about Kraft Heinz. Let's start there. Why is this happening? Is it all about consumer preferences and trends?
It really boils down to just that. It was only, in 2012 that Kraft spun off Mondelez, and at the time said,
a name of a company that I still am like, what is Mondelez?
That's because it was made up. It's a name that was just for Mondelez.
It's like a far, far away land that you go to in Disneyland.
That's what they want you to think it is. Anyway, sorry, Ken, go ahead.
Continue.
That's okay. And at the time, the thought was, let's break up the growthy business, the Oreos and the Cadbury, from the slow growth businesses, the Oscar Mayer and the cheeses and so on. Fast forward to today, and the company's just further segmenting that huge conglomerate. And now it's saying, okay, well, the grocery business, the cheese and the Oscar Mayer, poor guys, keep getting dissed, and the other business, which is high margin, and they're going to separate it. Does that add value? I guess time will tell, but it seems to me that what we learned was big conglomerates and slow growth businesses are tough to add value to. You have to manage them. You can't just keep carving them up.
Yeah, I mean, look what's happening in the media world with Comcast, for example, spinning off some of its media division into Versant, for example, or Keurig Dr. Pepper. I'm just curious if this is, in your view, if this is something that's actually cyclical, or if this is kind of the new normal, where these companies are saying, wait a second, we're going to separate the high value, high growth stuff from sort of the legacy stuff, whether we're talking media or talking consumer packaged goods?
Well, it's a good question, and it kind of depends. In the case of Keurig Dr. Pepper, it was just clear that the cold beverage business is far outperforming the coffee business. And that's coffee costs, it's tariffs. But I think there's more to it than that. I mean, it's a cumulative effect of price increases. So that's kind of a company-specific thing, I believe. When it comes to Kraft Heinz, I don't believe it's really cyclical. I think it's changing lifestyles and preferences. I mean, we know with the GLP drug intake that consumers are telling us they're cutting back on high caloric foods, including red meats, and they're gravitating towards healthier options. They like convenient options, and so on. So it's really a shift in consumer taste, as we led the conversation with, that ultimately is driving this.
All right, folks, we are talking, of course, with our Ken Shea of our Bloomberg Intelligence team. At the same time, President Trump is making some comments from the White House. This is live, currently surrounded by members of his administration, the Vice President Vance behind him as well. Secretary of Defense Pete Hegseth is there as well. So kind of monitoring some of the comments. As expected, this press conference talking about specifically the U.S. Space Command moving from the state of Alabama to the state of Colorado. Let's listen in just for a moment.
Alabama jobs, and probably much more than that, and hundreds of millions of dollars of investment, and that's billions, because it can't be millions, it's billions and billions of dollars. Most importantly, this decision will help America defend and dominate the high frontier, as they call it. I want to thank Secretary Pete Hegseth. He's doing a fantastic job. And Secretary of the Air Force, Troy Mink. Troy, thank you very much. Great job you're doing, Troy. This is such a big deal. This is one that everybody wanted to know. What are you doing? I also want to thank Senators Katie Britt, and I want to give my condolences. Your grandmother, her grandmother just passed away. She was 100, right?
100, and she loved you, Mr. President.
Well, and she was very proud of you.
Thank you very much.
Very, very proud of you. So thank you, Katie.
Wonderful woman.
She must have been. To produce you indirectly, I can tell you she had to be. Tommy Tuberville, who's a great coach. And I won't say anything about what happened with Alabama football this weekend.
Let's leave that out.
But you're not used to that, right? You're not used to that. But Tommy, Auburn won, is right. They did. So you're happy. Tommy's been a great senator, as you know, and a fantastic guy all around. He was also a tremendous coach. House Armed Services Committee Chair Mike Rogers. Thank you, Mike. Where's Mike? Mike, thank you very much. Doing great, Mike. Representatives Barry Moore, all great friends, Robert Adderholt, Gary Palmer, and Dale Strong. Thank you all very much, fellas. Appreciate it. In my first term, I created a thing called Space Force, so important. You know, we were losing the race in space very badly to China and to Russia, and now we're far and away #1 in space, and reestablished Space Com with a mission to protect American space assets and detect any threat to our homeland. We initially selected Huntsville for the Spacecom headquarters, yet those plans were wrongfully obstructed by the Biden administration. And as you know, they moved them to a different locale. And today we're moving forward with what we want to do and the place that we want to have this. And this will be there for hopefully hundreds of years. That's where it's going to be. I will say I want to thank Colorado. The problem I have with Colorado, one of the big problems, they do mail-in voting. They went to all mail-in voting. So they have automatically crooked elections. And we can't have that. When a state is for mail-in voting, that means they want dishonest elections, because that's what that means. So that played a big factor also. In Huntsville, Spacecom will play a key role in building the Golden Dome, as you know. That's going to be a big thing. Everybody wants to be a participant in it. Missile Defense Shield, we're going to be having a Golden Dome that the likes of which nobody's ever seen before. The finest, the best. And by the way, Canada called. They want to be a part of it, and that'll be great. But Canada wants very much to be included in that, and we're going to work something out with them, I hope. It will also ensure that our technological capabilities, of which we're way ahead of anybody else, there's nobody close, remain unmatched long into the future. So I'd like to ask Secretary Hegseth to say a few words. He was very much a part of it. And really, everybody behind me was. Every one of these people would call me and lobby me. I said, Katie, I don't want to talk to you anymore. I know what you want. She said, that's right, sir. That's what I want. And they got their way. So I just want to congratulate. These are really special people. They're politicians in many ways, but they're great patriots, I think even more so than politicians. So they fought very hard to get it, and it's an honor to give it to Huntsville. Pete, say a few words, please.
All right, everybody, you have been listening to President Trump live there in the Oval Office, the Defense Secretary, Pete Hegseth, now stepping up to the podium. This is all about the president moving the Space Command, the offices, the headquarters, if you will, relocating from Alabama, a red state, I should point out, or from Colorado, I should say, moving it from a Democratic state, a blue state, to a red state, Alabama. So again, that's kind of the big headline. Also talking about working out something with Canada on the Golden Dome. And this is, again, kind of the protection in terms of defense.
Yeah, the president said that his specific problem with Colorado is about mail-in voting. And that's what his issue with the state is.
Yeah, exactly.
The president did, in 2020, we should note, vote by mail.
Yeah, so it's kind of interesting to see some of this stuff moving around, but nonetheless, that's kind of the key announcements. We'll continue to monitor the president's comments from the Oval Office and, of course, bring you anything of note. In the meantime, we do want to say thank you to our Ken Shea, who was talking to us about what's going on with Kraft Heinz, that splitting up into two separate companies. He is BI Senior Analyst for Consumer Products, joining us there from BI headquarters in Princeton, New Jersey. And you are watching Bloomberg Business Week Daily. Carol Massar along with Tim Stanovic.
I'm Tim Stanovic along with Carol Massar. Let's take a look at some stocks on the move today. We're joined by Emily Graffeo from the Bloomberg News Cross Asset team. Emily, a lot to choose from, especially on the downside today.
Yes, but I'm going to start on a high note, Tim.
Okay.
Because why not? PepsiCo, ticker PEP, it actually was up as much as 6% today. Now it's up about 2%, but it's all on deal news. Elliott Investment Management confirmed that it has taken a $4 billion stake in the company. So Elliott's going to be one of the largest investors. And I guess the movement today in the shares shows that the shareholders like potential change that's coming with Elliott. They said that they said in a presentation, Elliott, that PepsiCo should review and streamline their snacks portfolio, divest underperforming assets, and they're also considering refranchising the beverage unit's bottling network. So I learned a lot about bottling
Well, it's
today.
something that Coca-Cola did years ago,
Yes.
and it worked out really well for Coca-Cola.
Yeah, basically like let PepsiCo focus on the brand and the marketing of the sodas, and then let outsource all of the efforts that go to actually like bottling the soda.
Which
so
happens
that's
like with Coca-Cola, right? They have the whole massive bottling operations. I just want to tell you, it took me down to kind of doing some Googling, and all I could think about was Fritos, which is owned by PepsiCo.
Yeah. I don't know.
You like Fritos?
I love Fritos.
That's like one of their core brands.
It's
So I
so
would imagine
good.
that PepsiCo is going to maybe focus more on making that brand
Fritos?
more Fritos,
Fritos with
maybe.
dark chocolate, perhaps?
Yeah, better than ever. The market value of the company has actually plunged more than 20% from a peak in May 2023. So although it's a name that we know and love, and we know the brands, they need, I guess, a little bit of help here.
Well, I think what's remarkable is pre-pandemic, and maybe just a few years ago, even after the pandemic, for quite a while, the snack brands business is what was helping to keep Pepsi afloat. And it was something that analysts said, hey, Coca-Cola doesn't have the snack side of the business that Pepsi does.
Right, it was seen as a
but
benefit,
again,
right?
consumer preference is shifting.
Yeah, I mean, we're now eating a lot of veggies and hummus and all that good stuff.
That's just
you two are looking at me like,
that's just-
could you go on vacation again? All right, let's talk about Constellation Brands.
Okay, this is another story of maybe changing consumer preferences. Constellation Brands, ticker STZ. They're the parent company of a number of alcohol brands, Modelo, Corona. So they cut their fiscal 2026 guidance today, citing weak consumer demand. That's going to hurt inventory rebalancing at the distributor level. So that stock fell 7%. And if you look at what the CEO had to say, over the last several months, high-end beer buy rates decelerated sequentially as both trip frequency and spend per trip declined. I feel like we've talked about this on the show before of like Gen Z doesn't like alcohol.
I know,
as much as maybe older generations.
We've had a lot of alcohol beverage companies who talk about like the pushback and declining numbers, whether it's wine, whether it's beer, right?
I mean, it's not me, but maybe people out there.
In all seriousness, you don't drink during the week.
Right, yeah.
Which is something I've learned about you. And I think a generation ago, you wouldn't have heard that from somebody, where you are in life, right?
Do you make up for it on the weekend?
Work and
hopefully.
No,
You're making me sound so lame.
No, it's just different.
Yeah, no, I guess it is different. Gen Z is very, they're focused on wellness.
After work and they'd get a drink.
Right. Yeah, you don't see that as much.
Exactly.
And you can see that in Constellation Brands' like forecast. They see enterprise net sales growth down 4% to 6%. They had seen a decline of 2 to 1%.
Listen, we've all been talking about Kraft Heinz today, and for good reason. Just give us 30 seconds on what we need to really know about that.
Okay, KHC Kraft Heinz, the stock is down majorly today. They announced plans to split into 2 separate companies, but the street is not happy about it. Warren Buffett isn't happy about it. But basically, there's going to be 2 companies, one selling Heinz ketchup, condiments, box meals, and then another selling slower growing grocery products. But right now, the market's not liking it. The stock is down over 7%.
Yeah, right. They're just kind of wondering where this ultimately goes. And
Yeah.
Good stuff, bad stuff, as some might see. Thank you so much. Great to have you here. Emily Grafeo, Bloomberg News cross-asset reporter. For more conversations, be sure to check out our Stock Movers podcast. 5-minute episodes, roughly, of your top winners and losers in the stock market. Find it on Apple, Spotify, or anywhere you get your podcast. Sometimes it's 4 minutes. Sometimes it's 5. Sometimes it's 4.5.
But it's always fun.
It's always fun. All right, that's going to do it for the first hour of Bloomberg Business Week Daily. If you are watching on TV, the close is coming your way in just a moment. We are continuing to track the markets. First September can be a tricky month. This is Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, we are just about 60 minutes away from the closing bell on this first day of trading in the month of September. I'm Carol Master along with Tim Stenovec, live here at Bloomberg headquarters in New York City. Looking at the S&P 500, most names in the index are lower today, 418 to be exact at this hour, 84 gaining ground. So, Tim, what does that mean? We've been bouncing around on the equity side of things.
We have. We're going to get an update from Lisa Mateo in just a minute. In the meantime, Carol, I say the president is still making comments at the White House. We do not have any headlines coming yet, but if we do have headlines, we will bring you those as soon as we get them. We do expect him, if he does take questions, we'll go and listen for any commentary on perhaps the Federal Reserve, on tariffs, on the economy, and everything that we know you are all interested in.
Yeah, so we'll keep an eye on that. In the meantime, coming up in the next 2 hours, Ian King of Bloomberg News on the U.S. revoking TSMC's authorization to freely ship essential gear to its main Chinese chip-making base. I feel like anybody who covers the semi sector, it's just like the news, some good, some bad, like it just goes back and forth.
Have you seen the stocks today?
Yeah, getting killed.
It's getting killed, down as much, close to 3% earlier, down about 1.7% as we speak. Also, Carol, you missed it. NVIDIA earnings last week, you were on a boat.
It's so funny. I was on a boat, but there was a headline first that was like kind of disappointing, and then there was one that was upbeat, but you were covering it.
Yeah, I mean, also all I'll say is NVIDIA stock down 4 days in a row at this point, and investors really trying to make sense of what's happening with China.
All right, everybody, we want to go back to the White House. President Trump continuing to make comments. Let's listen in.
They are great people, work hard, and there's no games, and they're very proud of it. And I would say they fought harder for it than anybody else also. A lot of states, 5 states really wanted it, but they wanted it more. And I kid you not when I say that these people, they spoke to me a lot. That's all they wanted to talk about. They didn't want to talk about the weather. They only wanted to talk about moving to this location, moving to Alabama, Huntsville in particular. So we're honored to do it. They really wanted it badly, and they got it. Peter?
President Trump, something completely different, but about a big viral social media trend over the weekend. How did you find out over the weekend that you were dead? You see that?
No.
People didn't see you for a couple days. 1.3 million user engagements as of Saturday morning about your demise.
Really? I didn't see that. You know, I have heard, it's sort of crazy, but last week I did numerous news conferences, all successful. They went very well, like this is going very well. And then I didn't do any for 2 days, and they said, there must be something wrong with him. Biden wouldn't do them for months. You wouldn't see him. And nobody ever said there was ever anything wrong with him, and we know he wasn't in the greatest of shape. No, I heard that. I get reports. Now, you knew I did an interview that lasted for about an hour and a half with somebody, and everybody saw that was on one of your competitors. I did numerous shows and also did a number of truths, long truths, and I think pretty poignant truths. No, I was very active over the weekend. They also knew I went out to visit some people at the club that I own, pretty nearby on the Potomac River. And no, I've been very active actually over the weekend. I didn't hear that one. That's pretty serious stuff. Well, it's fake news. You know, it's just it's so fake. That's why the media has so little credibility. I knew they were saying, like, is he okay? How's he feeling? What's wrong? I said, I just left. And it's also sort of a longer weekend, you know, it's Labor Day weekend. So I would say a lot of people know I was very active this Labor Day. I had heard that, but I didn't hear it to that extent. Go ahead, Peter.
Something else. We know that this country has a huge problem with school shootings. You've said that you're open to sending the National Guard pretty much anywhere. Would you ever consider sending an armed National Guardsman to every school?
Well, we have a big problem with school shooting, but we also have thousands and thousands of schools that run perfectly. You know, they talk about you can do things construction-wise, and that's really, I think nobody knows more about construction than me. You can build the construction doors. You can build what they call safety doors, where they lock on the outside, the inside, and every place else. Well, But if one of these lunatics happens to get through, then the police can't get in. Then they're looking for keys all over the place, and it takes a lot of disadvantages to doing, spending billions and billions of dollars and actually making it safer in some way for some of these lunatics that we're dealing with. But I don't think so. I've thrown out the concept. We have great teachers that love our children. The parents love the children. Teachers love the children too. And if you took a small percentage of those teachers that were in the military, that were distinguished in the military, that were in the National Guard, et cetera, and you let them carry, that's something that a lot of people like. I sort of liked it. I'd have to be studied, but they're trained. They know about weapons. You can't do it with every teacher because most teachers don't know, and But I always thought that would be an alternative. But it just we've had a lot of instances. Other countries have also. They have different kinds of problems than we have, but we do have. There's something going on. And it's a bad thing. Yes, please.
Have you spoken with President Putin in the past week? Have you spoken with President Putin?
Yeah, I don't want to. I have learned things that will be very interesting. I think in the next few days you'll find out.
Consequences if there isn't some type of announcement of a meeting with President Putin and President Zelensky? And what could those consequences be?
We're going to see what happens. We're going to see what they do and what happens. I'm watching it very closely. Last week, they lost 7,000, between the two countries, 7,313 soldiers, to be somewhat exact, for no reason whatsoever. And they're Russian and they're Ukrainian, but, they're soldiers. I want to see it end. Yeah.
Mr. President, have you decided you're definitely going to send National Guard troops to Chicago?
I didn't say when, but the answer is, look, Chicago's very interesting because I watched Pritzker get up and say we don't need help, we're safe. But 2 weeks ago, they had 6 people murdered, and they had 24 people hit by bullets. Last week, as you know, it was 7 people, 24 people hit, and 7 people died. And then over the last 2 days, that was the crown jewel. They had, I guess, 9 or 10 killed, and 50 hit with bullets. And you have this governor get up, who's a terrible governor. Probably he and Gavin Newsom would be probably the 2 worst and most naive. They're naive. Either they're naive or they're very untruthful. And he'll say, we don't want any protection. We don't need. So in the last 3 weeks, he's lost almost 20 people killed. There's no place in the world, including you can go to Afghanistan, you can go to places that you would think of. They don't even come close to this. Chicago is a hellhole right now. Baltimore is a hellhole right now. Parts of Los Angeles are terrible. If we didn't put out the fires, and I mean the other fires, the bullet fires, they didn't do a good job with. They should have had the water coming down, like I said. We had to release the water. We had to go in and release the water to L.A. It's so badly run. But if I didn't send the National Guard into Los Angeles, I would be making an announcement today. I'd be talking about Huntsville, and I'd simultaneously be saying, by the way, the Olympics is not coming to Los Angeles. If we didn't do that, and even the sheriff, the top law enforcement person in Los Angeles said, we could not have handled it without them. So that's what he said.
Make your mind up on Chicago, though?
Well, we're going in. I didn't say when. We're going in. When you lose, look, I have an obligation. This isn't a political thing. I have an obligation. When we lose, when 20 people are killed over the last 2.5 weeks, and 75 are shot with bullets. So let me tell you a little story about a place called D.C., District of Columbia, right here where we are. It's now a safe zone. We have no crime. It's in such great shape. You can go and actually walk with your children, your wife, your husband. You can walk right down the middle of the street. You're not going to be shot, Peter. You're safe. Everyone likes you anyway. They probably wouldn't do it. But it's so dangerous. And there are people in this audience you've suffered greatly. There are people in this audience that have been mugged and hurt badly, and they don't want to talk about it. Maybe you were very brave in talking about it. You made quite an impression on a lot of people. I appreciate it. But there were other people in this room that have been hurt very badly just walking down the street in D.C. Washington, D.C. is a safe zone right now. It's a safe city. The restaurants are open. They're booming. You can't get a restaurant. New restaurants are announcing that they're going to be open. This took place in 12 days. Now it's 15 days, but 3 days ago, it became what's known as a safe zone. It's a safe city. And this city was really bad, really, really bad. We took 1,600 people out, hardcore criminals that will not be coming back anytime soon. And we're very proud of it. You know, to have our nation's capital lose every week. You know, it was like years, many years, where every single week somebody was killed for many, many, many consecutive weeks. This went on for years. And then we had, last week it was announced that nobody was killed last week. And I made that announcement in front of a very distinguished leader of a country. And I'm saying proudly, ladies and gentlemen, nobody was killed in Washington, D.C. this week. He looked at me like, what's that all about? I say, yeah, we have a little bit of a crime problem, and we don't have a crime problem in Washington anymore. And the mayor has been very helpful, and the police commission has been very helpful, and it's been a great team. And I would love to have Governor Pritzker call me. I'd gain respect for him and say, we do have a problem, and we'd love you to send in the troops, because you know what? The people, they have to be protected. I saw today on one of your networks, not a friendly network, except really the opposite, I would say, very unfriendly network. And they interviewed about 12 people on this morning. Most of them were African American, they were black. And they were saying, please, please, please let the president send in. These were people from Chicago. Please, we need help. We need help. We can't walk outside. We're petrified. If the governor of Illinois would call me up, I would love to do it. Now, we're going to do it anyway. We have the right to do it because I have an obligation to protect this country. And that includes Baltimore. I saw where Governor Moore was asking me to take a walk down the street of Baltimore. Well, Baltimore is a very unsafe place. It's rated number 4 in the city, one of the most unsafe places anywhere in the world. But, you know, we took care. This was a beautiful thing that happened in Washington because we showed that it could be done. And this wasn't just sending big, strong guys, and they are big and they are strong. You know, we had a great decision from the Supreme Court that had to do with sort of talent. It had to do with you are put down based on merit. You can hire based on merit. So merit for a soldier or for a policeman is strong, physically fit, having a certain ability, not a person that is woke and got the job through woke, but wasn't strong enough to lift a gun out of the holster, et cetera, et cetera. No, I looked at the police. As you know, last week I went over, we had a meeting with, there had to be 300 people, and they were all very impressive looking. And when the bad guys see them, they're not going to do a thing. And so I'm very proud of Washington. It serves as a template, and we're going to do it elsewhere. But Chicago is certainly going to be high. I would love to have him call. I would love the governor of Illinois. I'd be honored to take his call. All he has to do is say, sir, we need help. It's out of control. And everyone knows it is. He's not kidding anyone. I would love to have, I would say, Governor Moore call, because I watched him over the weekend trying to explain that Baltimore, what they need is housing. No, they don't need housing. They need to get rid of the criminals. These are hardcore criminals. You know, we took many people off the streets of Washington, D.C. They're hardcore. They're not going to be good. In 10 years, in 20 years, in 2 years, they're going to be criminals. They were born to be criminals, frankly. They were born to be criminals, and they're tough and mean, and they'll cut your throat, and they won't even think about it the next day. They won't even remember that they did it. And we're not going to have those people. Washington, D.C. is now a safe zone. It's a safe place. And you can walk, Katie, you can walk right down the street with, by the way, one of the biggest human beings I've ever seen, which is her husband. He was a football player for like 11 years in the NFL. He's a big person. But big doesn't mean anything when they have guns and when they have knives and everything else that they have, right? But you can Walk right down the street, even by yourself, and you're totally safe. Washington, D.C. is a great thing. Yes, ma'am, please.
Mr. President, as you're calling on Democratic leaders across the country to work with you on crime, do you see your efforts here in D.C., including, for example, working with Mayor Bowser here as a model for bringing more bipartisanship in matters not only with crime, but also issues that matter to everyday American people's lives?
So Mayor Bowser's been great. She could have taken the thing, oh, well, and then after I clean it up, they'll take credit for it. You know what they do is they take credit. Like, we cleaned up Los Angeles. We did a great job there. And it was overwhelming what was going on. And again, the police chief made a statement that we could not have done, there's no way they could handle it. You saw what was happening out there. It was going to be a disaster. We stopped it cold. If we didn't do that, would have been a very sad day. And you know, remember, we have the Olympics, we have the World Cup, we have all these things coming, and we have 250, all of these things coming. But I watched Newsom get up and say he's doing a great, he's not, we're the ones that did it, and that's okay, whatever it takes. But the main thing is, but he got up and said, we did it. Well, he didn't want us there, and he's going to need us again because it's starting to form again. I see it. It's starting to form again. You know, we have to maintain. It's like maintenance on an airplane. You can buy it, but you have to maintain it. And if you don't maintain it, a good plane becomes very unsafe very quickly. So it's an honor to do it. It's a lot of presidents wouldn't do what I'm doing. I don't need this heat. But when I watched television last night and I'm watching the news and I see that 9 people were killed in Chicago and 54 were badly wounded with bullets, I say, that's not this country. We have to do something. And I do say this, I say this very much. I'm not speaking to anybody but them right now. I would love to receive calls from governors and mayors saying they need help. We'll help them. We have a lot of people. We have a great force. We have a great military force. You know, Pete will tell you that when I was running for office, and this was a big headline, I think, you know, probably got me a couple of votes, but you couldn't sign people in the military. Nobody wanted to join the military, the Army, Air Force, the Navy, Marines, Space Force, Coast Guard. We never forget Coast Guard because they've done such a great job. Never. But nobody wanted to join any of them. We were way below what we wanted. Every single one. The closest was the Marines, whatever that is. You'll explain that to me. But the closest was the Marines. But every service was way down, way down. And then I got elected, and our country's the hottest country anywhere in the world right now. Everybody's talking about the USA. They're talking about the job that we're doing. Everybody. We have the best economy. We have a very, very important decision being made by the Supreme Court because our country is the richest, the strongest, the most powerful. But if for some reason some liberal court, I'm talking about the court that just ruled, where even an Obama judge voted in favor of us, which I gave him a compliment yesterday, as you know. I said that took great courage. But it's a liberal court, and it's going up to the Supreme Court, who I think have been incredible people. I think they've made very wise decisions. But the tariff question, because without the tariffs, this country is in serious, serious trouble. We've taken in almost $17 trillion of investment is coming in. Most of it is coming because of tariffs. And if for some reason somebody wanted to be politically correct, I actually think it's unpolitically correct. I think politically correct is to approve it because there's nothing so popular as what's happened to our country. Our country is doing so well. But we had a liberal court gave us a very shocking ruling. And that ruling is basically saying that the trillions of dollars that are pouring into our country, putting us in a position like no country is anywhere in the world, that they'd like to see us that taken away. By the way, a lot of the people behind that lawsuit, that particular, are from foreign countries, I might add.
There's a video that is circulating online now of the White House where a window is open to the residents upstairs and somebody is throwing a big bag out the window. Have you seen this?
No, that's probably AI generated.
So
actually, you can't open the windows. You know why? They're all heavily armored and bulletproof.
So that's a fake video?
Well, it's got to be because I know every window up there. The last place I'd be doing it is that because there's cameras all over the place, right? Including yours. No, but every window, I've never seen a window that's, in fact, my wife was complaining about it the other day. She said, love to have a little fresh air come in, but you can't. They're bulletproof. And number one, they're sealed. And number two, each window weighs about 600 pounds. You have to be pretty strong to open them up. No, that has to be. Where was the window? Let me see.
All right, folks, you are listening to the president at the Oval Office right now, looking at a camera from one of the reporters, Peter Ducey from Fox, there showing what he was just asking the president about something being thrown out of a window there at the White House.
Yeah, Peter Ducey actually stepping up to the president and showing him a video on his phone. The president saying earlier that it was AI or because the windows of the White House, he said, do not open.
Let's go back to the president.
It's really bad. Just blame AI. But also they create things, you know, it works both ways. If something happens that's really bad, maybe I'll have to just blame AI. But there's truth to it because I see so many phony things. I saw something as I was growing up from the time I was a baby till now. I said, who did that? It was AI generated. So it's a little bit scary, to be honest with you. But those windows are all very heavily sealed.
Thank you, Mr. President. I follow up with what you were saying regarding that federal appellate court that ruled against you and your administration as it relates to your ability.
Well, they ruled against our country, the court, and they ruled against us before. It's a very liberal court.
You called it highly partisan in your
Well, it
social media
certainly
posts.
is. It certainly
and
is.
In fact, it was along ideological lines, 7-4.
Well, except that we actually got one of the Obama judges that was appointed by President Obama voted in favor of the tariffs because he felt it was imperative for our country to thrive and survive even. I gave him credit. I said, you know what? That took a lot of courage for him to do it because you don't see that often.
So my question is, imagine, I suspect you're going to appeal that all the way to the Supreme Court.
Well, we already have, yeah. In fact, we're doing something else. We're going to be going to the Supreme Court, we think tomorrow, because we need an early decision. I mean, look, the financial fabric of our country, we're a rich, incredible country right now, and we're able to, you know, other countries use tariffs on us for years, and we never did. I did a lot during my first term, but then we had COVID and we had to focus on other things. You couldn't be tariffing Italy, Spain, France, as they were dying by the thousands and millions. But we did with China, and China paid us billions and billions of dollars. And I started the process, but then I had to end it a little bit because of COVID. We focused on that. But no, it's a very important decision. And frankly, if they make the wrong decision, it would be a devastation for our country. We've taken in trillions of dollars. And by the way, all these countries signed agreements. As an example, they're all happy. Everybody's happy. But some whack job put in a lawsuit. It went before a very liberal court, and the liberal court ruled, it was 11, they ruled 7-4, with one of the most liberal of them all voting in our favor because they're patriots. I think I give tremendous credit to that judge. And now it's going to the Supreme Court. Now we're going to be asking for early admittance. We're going tomorrow, and we're going to ask for an expedited ruling because, you know, when you look at the stock market's down today, the stock market's down because of that, because the stock market needs the tariffs. They want the tariffs. If you look at AI, all of those, you know, all of that money that's going to be invested, trillions and trillions of dollars, the biggest thing, bigger than the internet, I suspect. It's the internet plus 3 or 4 other things combined. We are leading very substantially with AI. We're leading because of tariffs. We're leading because of talent, and this is where they'd like to be. But without the tariffs, we wouldn't have a chance because we wouldn't be able to protect those investments of the companies coming in. So if you took away tariffs, we could end up being a third world country. That's how big the ruling. So we're asking for an expedited ruling.
As a backstop to that, President, you have a Republican-controlled Congress. You control the House. You control the Senate.
Yeah, but we don't have 60 votes. We don't have 60 votes. I'd love to do that. Oh, if we had 60 senators, if we got the 60 votes, we would get them. But we need 60 votes, and we need, you know, a certain number in the House. I think we'd get, I don't know, we have about 5 of them here. Would everybody agree with me on tariffs? Without tariffs, we're a different country. We have taken in so much money. And here's the thing. We signed a deal with Japan. They're paying us hundreds of billions of dollars. We signed a deal with South Korea. We signed a deal with the European Union. We signed a deal with Europe. And those countries are paying us $950 billion. And they're happy about it. They're okay. As one of them said, it's amazing that we got away with it so long. One of my friends, a leader of one of the countries, and they're fine with it. They all signed. If that ruling ever went against us, I guess we'd have to give back hundreds of billions. We would have to give trillions and trillions of dollars back to countries that have been ripping us off for the last 35 years. And I can't imagine it happening. On a legal basis, they have no legal basis whatsoever. But on a common sense basis, it would destroy America. Okay.
You talked about controlling the sky. On Sunday, the satellite signal of Ursula von der Leyen's plane was alleged.
With Ursula? Well, she had an interesting event. She's a tremendous woman. And so what are you asking me about her?
NATO is concerned about it, about this.
Sure, NATO is concerned about it. Well, nobody knows where it came from, but they did take away her ability to use a phone. You know? Sometimes that's a good thing. Sometimes that could happen to me. I'd be very happy.
Mr. President, reducing the tariffs on India from 50%.
What does that mean?
Are you considering taking away some of the tariffs that you've imposed on India? You had posted.
No, we get along with India very well, but India has, you have to understand, for many years it was a one-sided relationship. Only now, since I came along, and because of the power that we have with tariffs, India was charging us tremendous tariffs, about the highest in the world. They were about the highest in the world, number one. And we, therefore, weren't doing much business with India, but they were doing business with us because we weren't charging them. Foolishly, we weren't charging them. So they would send in massive, everything they made, they'd send it in, pour it into our country. Therefore, it wouldn't be made here, which is a negative. But we would not send in anything because they were charging us 100% tariffs. And, I'll give you an example, Harley-Davidson. Harley-Davidson couldn't sell into India. There was a 200% tariff on a motorcycle. So what happens? Harley-Davidson went to India and built a motorcycle plant. And now they don't have to pay tariffs. Same thing as us. So what we're doing is literally thousands of companies are coming into the U.S., car companies, AI, but, more traditionally, car companies. We have so many car company factories under construction or being designed right now. And they're coming from China, they're coming from Mexico, I must tell you, and they're coming from Canada, a lot of them coming from Canada. But they're coming into our country because they want to build here. And they want to build here for two reasons. Number one, they'd like to be here. And number two, the tariffs are protecting them. And number three, they want to avoid paying tariffs. When they build their cars here, they don't have any tariffs to pay. When you build here, you don't have any tariffs.
Mr. President,
Go ahead,
in light of the Minnesota shooting last week, the Department of Homeland Security is now awarding more than $100 million to hundreds of faith organizations across the country to help them ramp up security. What's your vision for further protecting religious liberty across the country amid incidents of threats? And violence?
Religious liberty is so important, and we're talking about every religion now, and we're doing things on that nobody else has ever done, and we're going to be having a big announcement in about 2 weeks on that question. Yeah, please.
On Space Command, sir, are you concerned that people may not be willing to relocate from Colorado to Alabama?
No, I'm not worried. We'll get somebody else. The problem with Colorado is they have a very corrupt voting system. Look, I have so many friends in Colorado. Anytime you have mail-in voting, you have corrupt elections. Very simple. It's very simple. Even Jimmy Carter said it with his commission. They set up a commission with him and Scoop Jackson and some people, highly regarded people. And they said the finding was, if you have mail-in voting, you will have corrupt elections. Well, your radical left governor decided that he was going to have all mail-in voting in Colorado. Once you have all mail-in voting, and for whatever reason, the Democrats cheat. And they cheat like, they're not stupid. That's the only thing. They're no good on policy. They're no good on management. They're no good at government. But they're great at cheating. And they stick together, too. I give them credit for sticking together. Please.
Obviously, this is a big win for national security, moving this to Alabama. We all can agree with that.
Big.
Is there any idea of the economic impact this has on the state and on that local area?
Katie, do you want to answer that?
Look, I mean, this. Go ahead.
Please go.
This is going to be tremendous. I mean, the state of Alabama, what we've seen through this process is the worst of Washington. We've seen politics get in the way of what is best for the warfighter, what's best for national security.
We're hearing from Katie Britt, U.S. Senator Katie Britt, speaking right now alongside President Trump.
So we know the economic impact is going to be tremendous. There at Redstone Arsenal, we're proud to house everything from the FBI to headquarters there for material command to a number of things. We obviously have NASA with Marshall Space Flight Center, and so this naturally fits within. When you look at the decision matrix that they placed in front of us, that's why we ranked so high, is because we have the resources necessary and the ability to build out quickly to meet the needs in front of us. As far as economic impact, it would be tremendous. Does anybody have an exact number? 1,600 jobs.
3,000 spin-off.
With 3,000 spin-off. Look at this. This is teamwork right here. So we are really proud, and the people of Alabama are ready to get to work.
And I've got a housing question, if you could, just for a second, Mr. President.
Please.
Owning a home and going about the American dream seems like it's out of touch for a lot of Americans. Just recently, you pushed out a statement about addressing an emergency housing situation.
That's right. We're thinking about doing that.
Yeah, can you just...
Well, we need a little help from the Fed. We have a man named Jerome Too Late Powell. You probably heard of him. He's too late. He's way too late. And the economy is so strong that it's pushing through that. Normally, it would have been much tougher, but we're doing so well that we're pushing through it. But it makes it very hard for people to get mortgages because too late is too late. Very simple. He's too late. And probably political, whatever. He wasn't too late before the election. Before the election, he was cutting rates, right? Because he was hoping that, I guess, Biden would get in or that Kamala would. He was a big Biden guy. Explain that one. And then he was a Kamala person. But he was hoping, I guess, she'd win, I guess. I don't know. It didn't work out too well. But, yeah, we need a very serious cut. You know, I think that if you look back many decades ago, the United States was always the lowest, even if they were doing badly. The United States was, because without the United States, everything in the world would die. It's true. It's so powerful. It's so big. And I made it really big in the first 4 years. Then it started to degenerate with what this Biden administration did. But we built it up to a level that I never thought we could be at this quickly. We're the hottest, we're the best financially. The money coming in is so big because of tariffs and other things, but because of tariffs. Tariff gets us even those other things. Plus, it gets us great negotiating. I settled 7 wars, and numerous of those wars were because of trade. And numerous of the trade deals that I made were because of tariffs. It gives you a great negotiating ability. If that ability were taken away from us by a liberal court acting on essentially foreign nations, asking to get help from the United States government, when they've been doing this to us for 40 years, that's why we have $38 trillion in debt. We won't have it for long if they let us, if they allow us to do what everybody knows we should be able to do. Yeah, please.
Mr. President, another Biden-era action that you're now reversing is that you signed a deal last week to make federal buildings adopt and embrace classical architecture styles again. Can you talk to us about why you do that, and also what's your vision?
Well, we want to see beautiful buildings. Now, you know, it's in the eye of the beholder. I've seen architectural reviews over the years. I'm an expert at it. I've gotten a lot of great reviews. But I've seen buildings that I didn't think were very good get great reviews, and I've seen great buildings get bad reviews. So, but it's just a standard. We want to have a good standard. We're building something here. You know, for 150 years, they wanted a ballroom at the White House. We're doing something at the highest level, using great architects and all. And, you know, it's very exciting. But we have a lot of interesting things happening architecturally in D.C. And D.C. is like a different place. And, you know, even the contractor said, sir, we walked down today, we feel like much safer. It's like a different place. Washington, D.C. is great. Now, we're going to also beautify it. We're going to put a topping on the roads. We're not going to rip them apart and take 4 years to build a road that was exactly the same by the time you build it. But we're going to put toppings. We're going to put new medians in. We're going to get the graffiti off. We're going to put tiles up in the tunnels where the tiles are missing. We'll do the whole tunnel instead of, a little area where you see new tiles, old tiles that never look too good, but they could use it. They've been up for 50 years. They've served their duty. But we're going to make this within about a 20-mile radius from the White House. We're going to have this place spick and span. It's going to be crime-free, and it's going to be spick and span. It's going to be, you'll be proud of Washington again. Go ahead, please.
Sir, China's having a massive military parade that President Putin and Kim Jong-un will be attending. Do you interpret that as a challenge to this? And are you concerned at all about those countries trying to be some sort of counterweight?
Not at all. China needs us, and I have a very good relationship with President Xi, as you know, but China needs us much more than we need them. No, I don't see that at all, no. And I had actually a very good meeting with President Putin a couple of weeks ago. We'll see if anything comes out of it. If it doesn't, we'll take a different stance.
March today in California ruled that your deployment of National Guard troops to Los Angeles was illegal. Do you have any response?
Well, it was a radical left judge, but very importantly, what did you not tell me in that question or statement that you made? Pretty much of a statement, I think.
Well, I was asking for your response.
No, you didn't say what the judge said, though. The judge said, but you can leave the 300 people that you already have in place. They can continue to be in place. That's all we need. But why didn't you put that as part of your statement? Because the same judge ruled exactly as you said, except the judge said that you could leave the 300 people that you already have in place. They can stay, they can remain, they can do what they have to do. Thank you very much, everybody. We appreciate it. Thank you. Thank you. Thank you very much.
All right, everybody, you have been listening to President Trump speaking for quite a long time there, live from the Oval Office. The headline initially, or at least what seemed to be the reason for the press conference, President Trump announcing he's bringing the headquarters of U.S. Space Command back to Alabama, reversing a Biden administration move and capping a political back and forth after a push by the state's Republican congressional delegation. To be fair, though, once it opened up to reporters, Tim, he answered a question on a variety of topics.
Yeah, he did notably refute reports of poor health, saying that he's been active. The president brushed off a reporter's question about reports that he's been in poor health, saying that he was, quote, very active over the weekend. The president also, Carol, saying that U.S. military targeted a boat carrying drugs from Venezuela. He touted the administration's success after deploying naval vessels to the Caribbean as part of a push to stop narco trafficking.
And I just want to go back to something that we covered at the top of our 2 p.m. hour, and that had to do with the federal appeals court ruling that came down late Friday about President Trump's global tariffs. The ruling said that they were issued illegally under an emergency law, so that upheld a May ruling by the Court of International Trade. So that is something that is certainly top of mind for us. The president took some questions on that, and he said we will go to the Supreme Court tomorrow on the tariffs appeal. He said we need an early decision from the Supreme Court on that issue. And he said that stock market wants the tariffs. So again, kind of topping off some of what we've been covering in a big way today.
On housing, something that our audience pays attention to very closely, the president said that he's thinking about addressing a housing emergency, but he says, quote, need a little help from the Fed on that.
All right. So as we said, a variety of topics certainly being asked of the president. We want to get back to the markets, folks, because we're just about 22 minutes away from the closing bell on this Tuesday, first trading day of September. We're definitely off our worst levels of the session. Let's get to it. Some of your top business stories. Here's Lisa Mateo in for Charlie Pellet. Lisa.
You got it. And tech stocks leading the losses on this shortened trading week right now. We'll look at the NASDAQ down about 0.9% or 204 points. All mega caps are falling, with NVIDIA seeing its longest drop since March. Checking with NVIDIA shares, they're down more than 2%. Moving over to the Dow, down 0.6%, 304 points. The S&P 500 off about 0.8% or 53 points. In the yield space, we have the 2-year, 3.65%. That's up about 3 basis points. The yield on the 10-year, 4.27%, and that's up about 4 basis points. The Bloomberg Dollar Spot Index up about 0.5%. The battle for tech talent continues. Sources say Apple, it's lost its lead AI AI robotics researcher to Meta. And we have some IPO news. Fintech company Klarna, some of its shareholders, they're looking to raise as much as $1.2 billion as the company revives that New York IPO that was delayed earlier this year. And BlackRock Coffee Bar seeking to raise as much as $265 million in an initial public offering. It'll become the latest publicly traded coffee retailer on the U.S. exchange, joining rivals like Starbucks and Dutch Brothers. And speaking of Starbucks, its CEO says pumpkin spice season drove a record-breaking sales week. In an internal message, Brian Nickel, he told workers the results were seen across U.S. company-operated stores as well as strong sales in Canada. And finally, from Starbucks to McDonald's, fast food chain bringing back its extra value meals. The deals begin September 8th. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, TikTok, everybody. Just about 20 minutes to go until we wrap up the trade on this Tuesday, September 2nd, 2025. Lisa, just going over where we are in the trade.
It's back to school time, Carol.
I know.
Everybody's going back to school.
I know.
Doesn't it feel
this
like...
This is the first time I don't have
my
daughter going back to school. It's kind of cool.
Back to work. Or to work, she goes.
Yeah, I know, right?
That's really cool.
Kind of wild, right? Like you just realize you're in a different era.
Maybe, I was just going to say, maybe...
it ain't done yet, as they say.
I think she might be seeing some more school in her future.
Someone who is keeping track, well, who does also have somebody who just went back to school in a big year, right? Senior year? Senior year's a big one. With us is Bloomberg Senior Editor of Equities Americas, Eric Weiner, in the house. I was just thinking about, man, there's just so much coming at us. September's a big month. Historically, not a great one for stocks, even though we always think about October and the crashes that we've seen then. September, will it be different this time around? Or like, what is it about September? Is it September, rather? Is it just, Eric, everybody coming back after the summer? What is it?
That appears to be what it is. There's a lot of enthusiasm built up over the summer, and then September hits, and also you've had a lot of people out usually that last 2 weeks, so they come in and there's just a general bearishness, but it's not like September is a disastrous month. It's just down. But it's not like as you alluded to, October is sort of where the mess tends to happen. But this is just, this is not, today is not a good example of it, but it's usually just sort of a drip down with the end of earnings, not a lot of catalysts, and then we either start ripping into the end of the year or things hit the fan.
Yeah.
Which, and look, you can't obviously cannot make a prediction. Nobody can. What we can do is try to understand what the cumulative effects of maybe an unclear tariff policy, by some measures, by many measures, a labor market that is weakening, but at the same time, a Fed that seems more willing to cut rates at its meeting later this month. Taken together, what does that all mean?
Well, the rates this month are, so let's say 25 basis points is baked in. What's going to happen is really looking forward. So the market really wants to know, is this just a one-off 25 basis point cut, or are we talking about moving into a cutting cycle? And that's where you take the balance of what's going on with the job market, what's going on